Good evening, all the participants. Now we are playing ICAI motto song. I request all the participants to put their right hand on their heart. So we welcome all of you. Chairman of Ahmedabad branch, CA Penal in his absentia. Today's learned faculty, CA Nitesh Jain. Chairman of Indirect Tax Committee, CA Rahul Maliwal. Coordinator of this session, CA Parag Jagetia. We welcome all of you in this rainy season, and I guess the topic of today will make us fruitful in this rainy season, because input tax credit is an heart of the whole GST, and everything is surrounded with input tax credit. And friends, as you all are aware that we are having at branch blood donation camp, so I request to take participation in this blood donation camp on this Sunday. Also, I hope we all are participating in fitness challenge. So if you have not participated, you alone can challenge yourself and do your fitness program. So please don't forget this. And now I invite CA Rahul Maliwal to give introduction of the topic and start the session. Thank you.
Thank you, Bishan Bhai. The faculty for the day of the first session, CA Nitesh Jain, the chairman of the Ahmedabad branch in his absentia, CA Fanil Shah, the secretary of the Ahmedabad branch, CA Bishan Shah, the coordinator of the first session, CA Parag Jagetia, and all the enthusiastic GST participants. Welcome you all on the third day of this particular series. Till now, we have seen the practical aspect and understanding on the levy, time, value of the supply, as well as the place of supply. Now today we are going to learn the concept of the input tax credit. As Bishan Bhai has said, it is the heart of the GST, and for that we have the most renowned faculty with us, that is CA Nitesh Bhai, and you all know him very well. I just want to make one important announcement that on this Saturday, 11th of July, with the chairman consent to have the continuous learning, we are keeping the Jigar-wise session of the place of supply in respect of the service, which was remaining yesterday, on this particular Saturday at 5 to 7 evening, and the mail for the same will be sent to you shortly. So have the happy learning session. Now I will request CA Parag Jagetia to introduce today's faculty.
Thank you, sir. A very pleasant evening to everyone present here. I take immense pleasure in welcoming our speaker, CA Nitesh Jain sir, to our webinar. Thank you so much, sir, for taking out time from your busy schedule to share your valuable knowledge on input tax credit with all of us. Before you commence your presentation, I would like to introduce your remarkable career to our aspiring audience in a few lines, which may not fully do justice to the achievement you have had. So, Mr. Nilesh Jain sir is a chartered accountant from 2002 and is the founding member of a firm, NL Jain and Associates. He established the firm back in 2004 as a young CA searching opportunity in the field of indirect taxes. He has been contributing to professional journals like BCA journals and various professional websites. He has been a speaker at various forums, including ICA branch across Gujarat, CA Association, ICWA Ahmedabad, C&AG Ahmedabad. He is a member of Indirect Tax Committee of GCCI since last many years. With a little introduction, I request all of you to welcome our man of our, Mr. Nitesh Jain, sir. Over to you, sir. Please impart your valuable knowledge to all of us and oblige. Thank you, sir.
Thank you. In this 3 months, I've been watching this screen and talking to it so much that I don't know. I'm making this subject learn to myself. So, and as Bishan said, the GST was brought in to seamlessly provide input tax credit across all businesses. In the earlier regime, there were some issues, and I'll just close down. Okay. There were some issues with input tax credit, and because of input tax credit, majorly GST was brought into the picture. So yes, it is the heart of GST. I intend to take this into two halves. First, I think, I'll take this into two halves. One, I will discuss the basics of input tax credit, which will be into law, rules, reversal rules, and whatever. And then I'll just straight away go to case studies, because now basics are not more important. It's almost 3 years, more than 3 years that we've been dealing with GST. So I'll straight away jump to case studies, which will cover majority of the issues that we face currently. Okay, so let's quickly go through the basics first. The law part, section 16 is the heart of input tax credit. It tells you what is the eligibility of the eligibility criteria that you need to follow. The first one is that any expense that you incur or any goods that you buy or service that you receive should be used or intended to be used in the course of business. So if you pass this criteria, then only the eligibility gets defined. Second is that after you prove that this is intended for use or it has been used, you need to have an invoice in your hand for the service or goods that you have received. Then is the condition that has received the goods or services. So just receiving the invoice will not suffice. You have to constructively receive the goods or services. You may ask someone else to receive on your behalf. That is also allowed. So, but practically you have to receive the goods and services. Then the next condition is the payment of invoice has to be done within 180 days from the date of invoice. So if this payment is not done, then there are some issues. We will discuss what are the exceptions of this rule in some case study in the later part. But this is a condition that you have to fulfill. Then the tax charge has been paid. So there is a condition in section 16 which prescribes that the supplier has paid the tax. Then there is a condition that return also has been furnished. Right. Now these two last conditions, if you read the exact text of this section, then according to me, this deems that the recipient has paid the tax to the supplier, and the recipient has filed his own return to claim the credit. So as a recipient, I have no control over whether the supplier has filed the return or not, whether he has paid the tax or not. But according to the text, the literal interpretation of the text means that the recipient has to pay the tax to the supplier and the return has been filed by the recipient. We will deal with this again in a case study later. Then this section 17 describes, section 16 lets you know how to claim a credit, what are the criteria. Section 17 brings in some restrictions. Okay, so once you've claimed the credit, then you will have to go and find out whether you are eligible for that credit or not under section 17. So if, for example, you've received something, received a service which is for your home consumption. It has nothing to do with business, then Section 17(1) says that you are not eligible to claim that credit. If it is for non-business use, if it is for business use, you can claim the credit. Section 17(2) deals with taxable and non-taxable business. So if you have a credit which is both for taxable as well as non-exempt business, then there would be some proportionate reversal to be done, which is prescribed in the Rule 42. For considering taxable and non-taxable, zero-rated supplies, including SEZ and exports, will be considered as taxable business, and non-taxable business will consider as exempt supplies, which shall include many things prescribed in 17(3). Exempt supply shall include the following transactions. There is a definition of exempt supply, which we'll deal a bit later. That will be there. Other than that, you will also have to include transactions in securities, sale of immovable property, including land. Then whether you have to include dividend and interest on loans or not, and is a question. According to me, and there is a notification, I guess, interest on loans is not to be calculated for the purpose of calculating exempt supplies, right? Threshold exemption and everything is 20 lakhs is a different ballgame. For the purpose of Rule 42, dividend and interest on loans is not to be taken. So, the last thing that is not to be taken is shall not include Schedule 3 transactions. The transactions except sale of land and post-BO units will not be considered in Section 17(3). So for 17(2), exempt supply shall include all the transactions listed in 17(3). Then there is Section 17(4) specifically carving out an exception for banking and financial institutions. Because if you understand, banks have majority of their income from interest, which is a non-taxable item for them. And about 5-10% of their income is taxable business. So there were many controversies in past in the service tax era, wherein they were asked to reverse credits or considering interest as exempt and rest as taxable. So they were not eligible for much of their credits. So in service tax also they brought this and they've carried forward that into GST also, whereby they've said that a bank, a financial institution and a non-banking financial institution would have an option to either go to Section 17(2), whereby proportionate reversal as per your taxable and exempt income has to be done, which will include interest income, or go for a 50% ad hoc reversal. So claim only 50% of all the credits that they get. So this option has been given to them. This option can be exercised only once in a financial year and cannot be changed. And this restriction of 50% shall not apply on transactions between branches under same PAN number. So if SBI has a branch in Bombay and a branch here, so if they have some transactions which are otherwise taxable, then it will not be taken into consideration for this 50%. Blocked credits. Now this is one of the most important sections, and we deal with it day in, day out. This defines what credits you are not going to be able to avail. Other than the items listed here, all the credits are eligible. Subject to Section 17(1), 2 and 3, everything is eligible. Okay. So the first item, the amended section, Section 75, which was amended in February 2019, is for motor vehicles. Earlier, this subclause A was for all motor vehicles, including goods vehicle, but then there was a exception carved that transportation of goods was allowed. Credit motor vehicles for transportation of goods was allowed. But now, to cut out that controversy, they have said credit on motor vehicles having seating capacity less than 14 shall be available to following persons. So if a motor vehicle is having 13 or lower than 13 seating capacity, including the driver, shall be available to following persons only who further supply motor vehicles. For example, dealers, car dealers are allowed to have the credits of the cars that they purchase, who render services of transportation of passengers. So if I am a rent-a-cab person, if I want to avail credit and I'm ready to pay a higher GST rate, then I am also eligible to take the credit. Who provide training of driving or navigating the motor vehicles. These three are eligible to take the credit. Other than them, no one is eligible to take a credit. Right. Now, transportation of goods is not there in this list. Why? Because motor vehicles for having less than 14 and passenger vehicles are only restricted. So thereby transportation of goods, any vehicle used for transportation of goods will be allowed to be credit to be taken. Then the services of general insurance, servicing, repair and maintenance of motor vehicles shall be available only to the following. To the person whom credit is available in the above list, manufacturers of motor vehicles and general insurance companies. Earlier, prior to February 2019, this servicing, repair and maintenance credit was available to everybody. So they restricted this to only these three persons. Other than them, no one will be eligible for this credit post February 2019. Then there is a list going at food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, except when used for supply of similar services. For example, if you are rendering a service, for example, food and beverage service, and paying 18% on them, for example, in a hotel, 5-star hotel, then you will be eligible to take credit. Or if the above services are used as an element of taxable composite of mixed supplies. For example, an event manager takes services of food and beverages, outdoor catering, beauty treatment, and everything, clubs it into one event management service and provides to a client. Then that event manager will be allowed to take credit because he is using these input services as an element of taxable composite or mixed supplies in further of his output supply. Then the restriction goes on for membership of club, health and fitness center. These credits will not be allowed irrespective of whether you can prove that the membership was a corporate membership. Still, the credit is not allowed. Rent-a-cab, life and health insurance, except where these are notified to be obligatory for an employer to provide to its employees under any law. The rent-a-cab service is required by the BPO guys. Now, I don't know whether there is a law or not, but they require it as a condition of employment. So I think they will be eligible for this credit. Health insurance, many sectors which are where this health insurance is mandatory, they will also be eligible for the credit. Other than them, no one will be. Same goes with travel benefits extended to employees on vacation, such as LTA. The list goes on, and now this covers the works contract services when supplied for construction of an immovable property other than plant and machinery, except where it is an input service for further supply of works contract service. So these subclauses C and D are one of the most discussed subclauses other than H. So here construction services are supposed to be restricted. In the first clause, in the subclause C, if I am providing a works contract service, I am a subcontractor availing subcontract service or works contract service of someone else, I will be eligible to take credit. Or if it is with regards to a plant and machinery, I will be eligible. Same goes in the subclause 2. They have broken down it if you are availing purchasing goods and services separately and not as a works contract, then clause D will hit you. Goods or services are both received by a taxable person for construction of an immovable property other than P&M on his own account, including when such goods or services or both are used in the course of furtherance of business. So if I, as a chartered accountant, build an office and say that I'm using this office for furtherance of my practice and thereby generating output tax will not be a good argument to avail the credit. This clause will hit me. Now there is an explanation to subclause C and D. Construction includes reconstruction, renovation, additions or alterations or repairs to the extent capitalization to the said immovable property. Right. So they have suffixed this condition that construction has to be capitalized for this denial of credit. So if there is a construction activity which is legitimately booked as a revenue expenditure, then this subclause C or D will not hit you. We will deal with this in a case study separately. Now, again, the goods, the list goes on. Goods and services received from a person paying tax under composition scheme. So that credit will not be available. Obviously, we will not charge you on the invoice, hence the question will not arise. Goods and services used for personal private consumption. Goods lost. This is the subclause H which I was referring to. This is another subclause which is discussed very heavily. Goods lost, stolen, destroyed, written off, or disposed of by way of gift or free samples. We will discuss this in a case study. Any tax paid by supplier due to departmental intervention like e-way bill violations, search. So if in an e-way bill violation, the government makes you pay some tax, then the recipient will not be eligible to take credit thereof. Or in a search, someone is asked to pay a tax, you will not be eligible to take the credit thereof. Then these are the rules, two rules which are important, the twin rules for reversal of common credits. The first one is for common inputs and input services. And the second rule, 43, prescribes procedure and mechanism to calculate reversal on common capital goods. So all three input taxes are covered in these three rules, right? Then these are some definitions. Capital goods, goods which are capitalized in the books of accounts and used in business. Please mind, capital goods will include only goods. Services used for, say, installation of a capital good, even though it is capitalized with that asset, will not be capital goods. It will be an input service. Input goods, goods other than capital goods used in business. Input service, service used for doing business. Simple, very, very simple definitions. If you remember in service tax, they had extensive ifs and buts, but now they have made it simple. Output tax, it's again simple. Exempt supply that I was dealing in section 17.2. This exempt supply means supply of any goods and service which attracts nil rate of tax or which may be wholly exempt from tax under section 11 or under section 6 of IGST Act and includes non-taxable supply. Non-taxable supply means supply of goods and services on which GST Act itself is not applicable. For example, alcohol will be treated as exempt supply even though it is not covered by the GST Act. Then this more important definitions. Input tax credit means the credit of input tax. Input tax as defined in 262 in relation to a registered person means CGST, SGST, blah blah blah. So there is a list of what is to be treated as input tax. Mind well, PAN1 credit is not there in this. Now we'll straight away jump to case studies. The first one that I've taken is the ITC on van, the motor vehicle used by cash handling companies. There are ATM handling companies whereby these companies load cash from a designated place, take it to an ATM and refill the ATM as per the bank's instructions. Now they had a peculiar problem whereby they used to buy vans, refabricate those vans as per the requirement of safety as per RBI guidelines and use those vans for transportation of this money to various ATMs, etc., and banks. Now, one person CMS, which is a leading service provider in this area, filed an AR and asked this question whether vans, motor vehicles used for cash handling will be the ITC thereof will be available or not. The crux of this entire transaction was whether money can be termed as goods for cash handling companies or not. If the same can be termed as goods, then only credit can be allowed. So section 2, subclause 52, subsection 52 defines goods and it excludes money straight away. So goods means every kind of movable property other than money. So we don't have to read ahead. They said categorically money is not included. Then fortunately, they defined what money is. So they defined it by saying money means the Indian legal tender or any foreign currency, bill of exchange, traveler's check, remittance, or any other instrument recognized by the Reserve Bank of India when used as a consideration to settle an obligation or exchange with Indian legal tender of another denomination. So they said money will be money only if it is used as consideration to settle an obligation. I have to make a payment to someone, I pay him 10,000 rupees, that will be money. Or if I give 10,000 and I take back $100 or $150, then only it will be termed as money and not otherwise. So now going back to the definition of goods or the peculiar nature of the transaction, the cash handling companies, they treat cash or take cash not for these twin purposes. They do not settle it as a consideration or not against any legal tender. Right? So for them, this money is goods and it is not carved out from the definition of goods, and it is for all legal purposes, cash is goods for these cash handling companies, and hence the AR was good enough to say that credit of motor vehicles used by passenger transportation for passenger transport is only barred, which means okay for pre-Feb there was an exception carved in the definition to say that transportation of goods trade will be allowed. Hence they said that February 2019 they were allowed because transportation of goods was allowed because money is goods. Post Feb again the AR will still hold good. Why? Because passenger transportation is only debarred. Motor vehicles. Transportation of goods, motor vehicles are not debarred. And because the AR has said that goods, money is goods, hence that AR still holds. The logic thereof still holds. AR does not have any legal persuasion for other persons, but the logic will hold. Next is the elevator, a new elevator installed by a society. Now, whether an elevator is an immovable property or not, whether it is a works contract or not, is a much debated proposition since long. The facts of this case were that society installed a new elevator in one of its buildings. Society collects yearly funds against which it maintains the society in overall way. The change of elevator is also in its scope. And they asked a question, will it be eligible for ITC on the new lift? The contention in favor of the society which the society raised was that lift is a plant and machinery as defined in GST law, and it is used by the society members to access their flats. Its maintenance and repair is the job of the society. Plant and machinery is carved out as an exception in section 17, hence ITC must be allowed. Observation by the AR Maharashtra in the case of Las Palmas Cooperative Housing Society was that lift becomes part of the building. Once installed, hence becomes part of the building. Sorry. Plant and machinery as defined excludes building. Further, once installed, lift becomes immovable property, which is also excluded from ITC, hence credit will not be allowed. This was the AAR Maharashtra's order, which said ITC will not be allowed because the lift, when installed fully, becomes a part of the building, and building is carved out of the plant and machinery definition, hence the credit is denied. Now my question is the AAR right? Unfortunately, I'll have to answer it, being a virtual one. The plant and machinery definition, for the purpose of this chapter and chapter, the expression P&M means apparatus, equipment and machinery. So far so good. It's an equipment, it is an apparatus, machinery. The next element is fixed to earth by foundation or structural support. Again, there is a huge structural support that goes into an installation of lift, that are used for making outward supply of goods or services or both, and includes such foundation and structural support. This lift is undeniably used by the members, and the society has to provide a running lift to its members, right? So again, if the society's services are considered to be taxable, irrespective of the concept of mutuality, I'll put that question aside. Considering that the society is taxable and it is rendering a taxable service, then this third condition gets fulfilled, but excludes land, building or any other civil structure. This is what the AAR used. The exception that they use, that building is excluded from the definition of P&M, and they said it is not. Now, is it a building? Is lift getting converted into a building? Now, for being an immovable property, as per various Supreme Court verdicts, there are 4 criteria which can be listed. If these all 4 conditions are fulfilled, then in my view, a particular asset can be said as an immovable property. The first one is degree of permanency of the attachment to the earth. Now, lifts are by definition attached permanently to something which is attached to the earth, right? So, degree of permanency is no one installs a lift with an intention to remove it. So, degree of permanency is there. Intent of use of the goods property is essentially of immovable nature. Yeah, essentially the lift does not have to move. It stays there where it is installed. So there the intent is very clear. Cannot be detached from earth without causing substantial damage. Now, if you ask a lift manufacturing company or installing company, they will say that the entire lift can be uninstalled as it is and can be installed in a given place if the entire measurements match. So there would be near to zero loss. So this condition is not fulfilled. It can be detached from earth without causing substantial damage. Identity of the goods as post removal is lost. No, it is not lost. The identity, if it is installed somewhere else, will again it will remain a lift even after it is removed, right? So, as per me and as per various Supreme Court judgments in the excise law, this lift cannot be treated as immovable property. So, the view taken by AAR, considering it as part of building because and building being immovable, the credit is not allowed. I do not agree with it because it is not an immovable property. Lift is not a part of the, it cannot be treated as a building being an immovable property, hence credit will be allowed. Now let's go to another case study. This is reversal in case of an unfortunate fire if it occurs in a company. Then what happens to the credit that you've already taken on capital goods, on input services, on imports? What happens to that? So the facts are the company constructed a new factory in 2018 and installed 100 crores worth of machinery and took 18 crores of ITC on capital goods. It spent 10 crores in installation related services and took 1.8 crores as ITC on services. All these services were also capitalized. Company started operations in late 2018. On 2/7/2020, in a huge fire, all machinery, raw material, and finished goods were destroyed with zero salvage value. Company seeks opinion on whether they are required to reverse credit taken on capital goods, installation services, raw material, and finished goods. So they are asking our opinion on four things: capital goods, installation services, raw material, and finished goods. So let's go through the section 17.5H again. Section 17.5 reads, notwithstanding anything contained in subsection 16.1 or 18.1, input tax credit shall not be available in respect of the following, namely, goods lost, stolen, destroyed, written off, or disposed of by way of gift or free samples. So if you read all these words, lost, stolen, destroyed, written off, or disposed by way of gift or free sample, it's clear that this is only for goods and nothing for and not for services. So out of the four, the services goes away. There is no other provision in section 16, 17 or 18 which prescribes any reversal for services. So let's take the easy part out first. The installation services, even though they are capitalized, they do not become capital goods, hence their credit will be available and the company can carry it forward. Now let's go to the raw material part, the second easier part. The raw material that the company had on that day, they had taken credit thereon. Now again, if you read this, the goods were destroyed with zero scrap value, zero salvation value, right? So yes, credit will have to be reversed. So raw material and services, so services credit will be allowed, raw material they will have to reverse. Now let's come to, and mind well, raw material also only on the stock that was there, lying and which was engulfed in the fire and lost or destroyed, not otherwise. Now let's go to the finished goods, or let's go to capital goods first. Now if you read goods lost or destroyed, yes, the goods are destroyed, and the goods, capital goods includes is also goods. So assuming that capital goods is also covered in this definition, there is another school of thought which says that this entire, if you read it together, this is only for inputs and not otherwise. Even though section 17.5 the top reads input tax credit and not inputs. Hence, even if you take, if you don't believe in that school of thought that this is only for inputs, let's believe that this is for capital goods also. Then now we need to see how much to reverse, because those capital goods were used for 2 years, undeniably. Now we need to read the law and find out where is the mechanism to calculate this reversal. Section 18 and Rule 42-43 prescribes many other things. Section 17 quoted above do not cover services, the do not cover the facts narrated above. Rule 42 and 43 are giving mechanism for reversal of common credits only. Okay, so if you go back to the definition of the 42 and 43, these are only reversal rules for input and input services 42 and for common capital goods 43. And for what? For reversal of, if you have taxable and exempt businesses, then only these two shall apply. There is no prescription for what happens if there is a fire and the goods are lost forever. There is no prescription in either section 18, 17 or 42, 43 or any other rule. Fine. So the famous maxim that day before yesterday, Puneet was also discussing, that if there is no mechanism to calculate something, then the levy fails. So this will apply here, and hence, as per my view, there is no requirement to reverse the credit on capital goods. You can continue with that, and if you will say if the business is lost, what good is the credit? So a person can still continue his business, not a manufacturing business, then a trading business. Still, that credit can be used, right? Now, I've been given to understand that insurance companies also take opinions, and if they find that this reversal was not required to be done legally, and the company has done, they may disallow your insurance claim, right? So having reversed is not a good argument. They will ask whether it was legally required to be reversed or not. So just confirm with the insurance company whether they are going to raise such issues in the future or not. And if they are not going to raise it, please go ahead and take the claim, include the reversal in your loss, and claim the money from them. But if they are not going to include this claim in your loss, then don't reverse. Legally, it is not required to be reversed. Now let's go to the finished goods part. Now, here, if you go by the strict words used, they have said goods destroyed, right? Credit will not be available on input tax credit for the goods that are destroyed. On the finished goods, I did not take any credit. The raw material that were consumed while manufacturing those finished goods, I had taken the credit. But for finished goods, I did not take the credit. So there is an argument, a safe argument, a legal argument, which says that finished goods also credit is not required. Yeah, hello? Okay, let's go ahead. Hello? Okay, I'll just go ahead. I think there's some disturbance. Okay, so I think I'm clear here. On services, you are not required to do. On capital goods, you are not required to do. On finished goods, you are not required to do. Only thing that needs to be reversed is the credit taken on raw materials, that also on proportionate basis to the stock that was destroyed. Now let's go to another issue that is coming up recently, is the ITC of windmill. Many companies have installed windmills for depreciation purposes or for any other purpose, whereby the company has nothing to do with power generation. It is into some other business, say manufacturing of steel or manufacturing some other product. But for some other purposes, they install a windmill. And by the nature of the asset, it has to be installed somewhere where the wind velocity is high, so that the power generation can be achieved. So it is normally installed near a beach or a desert where the wind is high. But the manufacturing plant is near a city. Say in this case study, company is into manufacturing and selling of steel utensils, has its plant in Changodar, Ahmedabad. It installed one windmill for rupees 10 crore in Amreli district. It has a power transmission agreement with Getco Limited, which is government-owned energy transmission company. Company gets deduction of equivalent units generated by the windmill in its Ahmedabad steel plant's electricity bill. Now the company is asking whether it is eligible to take ITC on the windmill and the services which are used to install that windmill. So now let's see whether all the conditions of section 16 are fulfilled or not. Now, can we say that the windmill is used for business? Let's park it for some time. Does it have the invoice? Yes. Is the payment made in 180 days? let's assume it is made. Goods received, yes, the windmill was received. The supplier has paid tax, yes, let's assume he has paid the tax. Now, the only condition that needs to be tested is used for business. Right? Now, whether windmill for captive consumption, yeah, if I agree, if the company had sold the electricity generated to someone else and received some income out of that sale of electricity, I agree that there is a restriction in Section 17, but that asset is still used for business because the windmill is generating electricity. My business is to generate electricity. So yes, it is used for business. Now my restriction in Section 17 will hit me, but Section 16 conditions are fulfilled. Hope I am clear. Now let's go to restriction in Section 17. Apply only the goods are used for exempt or non-business activities. Section 17 applies only if the goods are used for exempt or non-business activities. So had he been selling the electricity, I agree the credit would not be allowed because Section 17 would hit. Now, as the facts say that it has a power transmission agreement with GetCo, which normally all kinds of windmill guys have this agreement. They don't sell normally to outsiders. So if you read this GetCo agreement, it clearly says that the transmission company will transmit the electricity from the windmill to a grid, designated grid of the main the electricity company. So the electricity generated is practically wheeled back to the company which is owning the windmill, because the other fact says the company gets deduction of equivalent units generated by the windmill in its Ahmedabad steel plant. So, for example, its monthly bill was 10 lakh rupees electricity. After deduction, it will receive only an 8 lakh bill. 2 lakh deduction would specifically be shown in the invoice. Right? So, it is a captive electricity generation asset. Right? Even though electricity is exempt, I am supplying that electricity to myself, and hence it is not an exempt supply. And therefore, that business, that windmill is used for a business which otherwise is for selling steel utensils. Right? His input cost is reducing. Hence, it can be termed as used for business, and then there is no restriction that is there in Section 17. Hence, ITC of windmill will be allowed without a doubt. Only if the electricity is sold to an outsider, credit will not be allowed. ITC on retention. If you are aware, in the construction business, there is a norm because of long gestation period of the nature of the contracts and the defect liability clauses. There is a payment retention clause whereby it says that a certain percentage, 5%, 10%, will be retained for a predefined period, which is called as the defect liability period. And after completion of that period, if there was no defect found, then that payment will be released. And if a defect was found, that subcontractor or contractor has to rectify that defect on his own cost. And if he does that, then also that money will be released. Now, in the given facts, subcontractor raises a 100 crore bill with 12% GST for construction of road. Company releases 90 crore plus proportionate GST thereon immediately. Now, is the company eligible to take ITC of GST on 10 crore which it has retained? Now, here is the clause which I was discussing, the provision that there is in Section 16, which is reproduced in the slide, provided further that where a recipient fails to pay to the supplier of goods or services or both, other than the surprise on which tax is payable on reverse charge basis, then he shall not be eligible for the credit. So the phrase used is fails to pay. The contract is very clear that this amount is payable only after 3 years, and that also after rectification of all defects, or if there is no defect. So it is a conditional retention. There is no failure as per the contract. So this brings me to a larger the question that if a contract, an unmanipulated contract, has a clause which says that the payment has to be made, say, after 9 months, can Section 16 proviso hit me and say that no, you will not be eligible for the credit? As per me, and as per the literal interpretation of the clause of the text used in the proviso, I say it is not applicable. The 180-day rule is superficial and is only if there is an active failure on the part of the recipient to pay the consideration. Here, there is no active failure. Hence, but and everyone realize this is a litigation prone matter. Hence, please trade with caution. ITC, in this retention thing, I think there is a Gujarat High Court order in the case of income tax, and also a service tax judgment in the case of Hindustan Zinc, which in service tax era said that payment clause, this condition will not be hit and trade will be allowed, just because there was no failure. And in income tax, they said there is no requirement to pay income tax because the accrual of this 10% is not there. Hence, 90 crores will only be the income and 10% will not be the income. I don't remember the citation, but there is a Gujarat High Court order and also a Calcutta High Court order, specifically in income tax. ITC on transition credit. Now, the case study that I've taken here is with relation to whether transition credit is subject to reversal under Rule 42 or not. So the facts are the builder has an ongoing commercial project on 1/7/2017 on which he claims transition credit under Section 140 by filing requisite transit returns and claims credit of 1 crore. From 1/7/2017 to 30th April 2019, it claims ITC of rupees 10 crore. So total ITC is 11 crores. It receives BU on 1st May 2019. Till this date, he has sold 75% of the carpet area constructed by him, and rest 25% is sold after receipt of BU. He seeks advice on how much reversal is he required to make under Rule 42. As we all know, from 1/4/2019, there is a specific criteria formula given for builders in Rule 42, which is area based now, and it specifically asks you to take ITC from 1/7/2017 till the receipt of BU, right? So now let's read the first part of the rule, sub-rule 1 of Rule 42. The heading of Rule 42 says manner of determination of input tax credit in respect of inputs or input services and reversal thereof. So it specifically uses input tax credit. And as we saw in the earlier slide, input tax credit definition does not include transition credit, right? And if you read further, the input tax credit in respect of the sub-rule 1, the input tax credit in respect of inputs or input services, which attract the provisions of sub-rule subsection 17, 1 and 2, being partly used for purpose of business and partly for other purposes, then you have to follow the mechanism given below. So, is transition credit, the service tax credit, the VAT credit, the excise credit that you have taken in Tran 1 returns, is it input tax credit? In my view, it is not so. Input tax credit is very well defined. It clearly says what it means, and it does not cover the credits taken under Section 140. It specifically lists out which credit are allowed are to be considered as ITC, as input tax credit, and hence the subject matter of reversal here would be 10 crore and not 11 crore. 1 crore will be fully available. Now on 10 crore, you will be required to reverse 25% of the credit. So 2.5 crore will be reversed and 7.5 crore will be retained plus 1 crore. So overall credit will be 8.5 crore that he has retained. So let's go ahead. Now we come to another case study which was a hot topic in last March, March 19, that is, which is reversal on post sale discounts. Again, in service tax era, the post sale discounts being called as incentives are subject matter of show cause notices, and crores of show cause notices are being issued to the car dealers and many other companies. Here I've taken a specific case study for a car dealer. But in GST period, a car dealer regularly buys cars from manufacturer as per the prices fixed by them. OEM declares monthly incentive bulletins whereby he provides following kinds of schemes. Purchase target achievement discount. So for say if you purchase 100 Centros with me in this month, I'll give you this discount. A retail target achievement discount whereby they say if you sell these 100 Centros in this month, then only I will give you per car this much. Then there is a reimbursement discount whereby, for example, loyalty bonus. It is payable to a dealer by the manufacturer only if he passes on equivalent discount to the customer. So if the dealer has to show the proof that he has given this discount to the customer, and hence the manufacturer gives it to the car dealer. Then there is the fourth category, which is quality oriented discount, which is dependent on how well he runs the dealership. Right, the customer satisfaction, how well you dress your sales guys, and blah blah blah, many things. Now the dealer is seeking your advice on whether he is required to make reversals of ITC taken on purchase on these post-sale discounts. I'll give you a figurative example whereby I purchase a car at 10 lakh rupees and the tax rate, let's assume, is 30%. So 3 lakh is the ITC that I've already taken. Now because I've achieved the discount scheme that the manufacturer has rolled out, I'm eligible to take a credit, take a discount of 2 lakh rupees from the manufacturer. Now, am I eligible? Have I to reverse any credit on this 2 lakh? Because what I'm going to pay him is 8 lakhs only. 2 lakh is a discount that he's giving me, but it is fancily dressed as an incentive. Earlier, I don't know right now, but earlier many dealers used to book it as an incentive income in their profit and loss account on the right hand side of the P&L as an income, and were not reducing it from the purchase. Now let's read section 15.3. The value of the supply shall not include any discount which is given. And now let's read A. Before or at the time of the supply, if such discount has been fully recorded in the invoice. So if you record a discount in the invoice, no questions asked, the discount will be available as a deduction, subject to the transaction pricing norm, transaction value norms. Okay. Now, if it is on the invoice, no issues. Now, if it is not on the invoice and if it is genuinely a post-sale discount, the subclause B will come into picture, whereby it says any discount which is given after the supply has been effected, if such discount is established in terms of an agreement, entered into or at or before the time of such supply, and specifically linked to relevant invoices, and input tax credit as is attributable to the discount on the basis of document issued by the supplier has been reversed by the recipient of the supply. So basically, there are three conditions that I have to fulfill if I want to have a deduction as a supplier. So manufacturer will have to fulfill these three conditions, that the discount has to be established in terms of the agreement before he makes the supply. This discount has to be specifically linked to a relevant invoice, and the credit, the dealer has to reverse the credit, equivalent credit. Then only he will be able to lower his output tax, right? So if he issues a credit note under section 34, then he'll have to fulfill these three conditions if he wants to also give a GST in that and thereby reduce his output tax. So as per me, if all these three conditions are fulfilled, then the discount is to be deducted and output tax can be reduced by the supplier and the recipient has to reduce his credit. Now, whether these conditions are fulfilled, how are these fulfilled is a different matter. You will have to establish whether there was an agreement or not, or whether the bulletin issued itself is an agreement or not, and whether the linking in invoices of the credit note has happened or not. It's a procedural matter which can be handled on GSTN. And the third is whether the dealer has reversed the credit or not. Now, this is a fact, matter of fact, whether he has reversed or not. But certainly, if the manufacturer reduces his output tax, uploads the credit note, then by the nature of the scheme, my 2A will be reduced, GSTR 2A credit. And hence, if you read Rule 34 condition, I will have to reverse that credit today or later. I cannot avail that credit as a dealer. So yes, my advice would be, if the manufacturer is fulfilling all these three conditions and is issuing a GST credit note, then yes, credit will be they can reverse the credit. Now another case study, the supplier, not a case study but a study of various the earlier provisions in under the VAT Act of Delhi and Maharashtra vis-a-vis section 16(2). So whether the supplier, the condition that the supplier fails to pay the tax and file return, whether the recipient has to reverse the credit or not. Now, if you read section subsection 2(c), which says that the tax charged in respect of supplier has been actually paid to the government. The word used has been actually paid to the government, right? So there is no if or but. It has been very clear. They have said they have to receive the tax. Now, in the prior GST, the Delhi VAT Act read like this: no tax credit shall be allowed to the dealers or class of dealers unless the tax paid by the purchasing dealer has actually been deposited by the selling dealer with the government or has been lawfully adjusted against output tax liability and correctly reflected in the return filed by for the respective tax period. And section 48(5) of the Maharashtra VAT Act read, for the removal of doubt, it is hereby declared that in no case the amount of set-off or refund on any purchase of goods shall exceed the amount of tax in respect of the same goods actually paid, if any, under this act or any earlier law into the government treasury, except to the extent where purchase tax is payable. So both more or less use the word actually paid, right? Now, the Delhi High Court in the case of Mahan Polymers dealt with this very provision under the Delhi VAT Act and said, they read down the provision and said that even if the supplier doesn't pay, the credit will be available to the recipient. The Delhi VAT authorities will have to go and recover it from the supplier and not the recipient. However, in case of Mahalakshmi cotton ginning pressing and oil industries, Bombay High Court also upheld the provisions of 48(5), contrary to what the Delhi High Court did, wherein they said For the reasons indicated earlier, we do not find any merit in the challenge to the provisions of 48(5) of the Impact Act. We decline to accede to the prayer of reading down the provisions of Section 48(5), and thereby they validated the provision and said that if the supplier has not paid, then the recipient will have to reverse the credit. So these are totally different laws, but they also interpreted differently, and strangely, both are affirmed by the Supreme Court. So the language in one was interpreted to say that the supplier, even if he doesn't pay, the recipient cannot be challenged. In Maharashtra, they said that the recipient can be challenged, right? But the most important thing in the entire thing here is the affidavit that the uh, Additional Solicitor General gave is very important here, and I'd like to read it. The statement given by State Advocate General in the case of Mahalakshmi Cotton Ginning in the Maharashtra case, whereby the learned advocate appearing on behalf of the state has tendered a statement of the steps that would be pursued against defaulting selling dealers, wherein he said to prevent a cascading effect, the tax will be recovered only once. What is the GST authority doing? He is recovering from every person. In the entire chain, if the credit has been passed on to 5 people, they get hold of all 5 of those taxpayers and ask them to reverse those 18 rupees. So it converts into a recovery of 72 rupees or more. The sales tax department will retain the option of denying a set-off and of pursuing all selling dealers in the chain until recovery is ultimately made from any one of them. So if one pays, then they will not challenge, but if one has not paid, then they will challenge all. This is a specific affidavit given by the state to the court. So I'll come back. Oh, sorry. I'll come back to the discussion. Yeah. Now I've held discussed section 18 here. The credit eligibility due to change in taxability. This is for people who join the GST regime. They were not taxable earlier, but now they are taxable. So if whatever stock they have and whatever GST they have paid, whether they will get credit or not, the entire section 18 is for them. There is section 18(6), if I'm not wrong, which says that if you are transferring the entire business to someone, and if you have or there is a merger happening or an amalgamation happening, then what happens to the ITC that the person has, the transferee, the transferor, sorry, has in his books. Now there is a entire procedure given on how to transfer that credit, subject to that there has to be a condition or in the contract which says that entire liabilities whatsoever of the old company will be are being taken over by the new company. That condition has to be there when the merger happens. If that condition is not there, ITC cannot be passed on. So this is a procedure given. I'll not go into detail. Okay, now this is for reversal of credit on removal of capital goods. So we discussed a case study in fire where there was no removal, there was no supply of the capital goods or a scrap of the capital goods. The entire capital goods was lost. But if there is a condition, for example, I have a car as a chartered accountant. Let's assume I've taken a credit. And I said, oh, let's take this laptop. I've taken a credit. Now, after 2 years, I am selling this laptop to someone else. I bought it at 1 lakh. I took 18,000 credit. Now I'm selling it at 60,000. Now what happens? So section 18 refers to that. So in case of sale or removal of capital goods on which ITC was taken, the registered person shall pay an amount equal to ITC taken on the said capital goods. So they have to consider that this laptop had a life of 5 years and a proportionate reversal will have to be done. This is what it says. Cancellation. Now, cross charge versus ISD. I have 3, 4, 5 minutes left. Then I'll ask Rahul if there are some questions that I'll be dealing with in 10 minutes. So
Yes, we have the questions. So if you have finished it, then we can start the questions.
So I can finish this. This is more of cross charge. I think someone else can deal it. Nothing else is left more. Yeah, let's take the questions.
Yes. So I'll just start the presentation.
Okay, I'll just I have to do something. No. Okay.
So thank you, Nitesh Bhai, for excellent presentation and discussing and deliberating your views on ITC. I guess now you can able to see the presentation. The first question is, please explain whether RCM is applicable on transport charges paid to truck owner who does not issue consignment note. And another question is, if we are purchasing goods on which GST is exempted and we are registered under GST and paying transport charges, are we able to pay RCM on such transport? Nitesh bhai.
So there are two questions in this. One is whether if a transporter does not issue a consignment note, whether RCM tax, the tax on transportation freight, is payable under RCM or not. I think this is coming from the definition of the GTA, which says that a consignment note has to be issued by whatever name called. So even if a consignment note is not issued by the name of a consignment note, he will be issuing some sort of document which is there on while the goods are in transit. He will be either giving some note, some invoice, something which establishes where the goods are going from where to where. So that will also be considered as a consignment note, and hence RCM will have to be paid as per my view. And the second question is, if the goods that are being transported are exempt, which are being purchased are exempt by nature, and some freight is being paid for their transportation, and the person who is getting them, the recipient, is registered under the GST law, then whether he is required to pay the RCM or not. Sir, even if you are not registered, you will have to get registered under section 24 because there is a mandatory registration required, and you will have to pay tax under RCM irrespective of whether the goods are taxable or not. So let's go to the next.
Yes. So a person has, I guess, if the product is exempted, then he should include transport charges in the value of those exempted goods, and that's how he can,
Legally plan the transaction.
and in the first, I guess, if you are a person who is able to get the input tax credit, then I don't think even if consignment note is not there, you should pay tax and take the credit.
Yes.
Sir, next question is vehicle used for providing service. That person taken the instrument and travel through the vehicle and provide service at place and return back to office are eligible to take the credit.
No, I didn't get vehicle used for providing service to that person taking the instrument.
For servicing at your plant, he is using his vehicle, and for that, can they avail the credit or not of vehicle?
Okay, I'll just reframe. There is a prefit, a special vehicle which he has purchased. He has retrofitted it with some equipment, He takes that vehicle to the person's place, to the client's place, and does some kind of repairing. So he is asking whether the credit of the vehicle can be availed or not. Am I right?
Yes, it seems so.
Yeah. So in that case, I'll again go back to section 17.5 subclause A, subclause A, which says that only motor vehicles which are for passenger transportation are restricted. If you have a specialized vehicle registered as a specialized vehicle under RTO, then there is no way that the credit can be denied. You will get the credit.
Factory owner is eligible to take the credit of factory shed.
This can be answered in two parts. To start with, no. Factory shed by definition are not immovable property. But as I discussed in the earlier case study, if you can prove that the factory shed is completely movable without any damage happening if they are removed, yes, you may have a case. But generally speaking, factory sheds that I have seen are of civil nature and are not of they cannot be removed without any substantial damage. Hence, factory shed credit cannot be available. Having said so, if, for example, in pharma companies, they have some cold rooms where they, by requirement of law and by requirement of the exact nature of their business, they are required to construct a room with zero impurity, whereby no impurity enters the room. Now, I've been told and I've been given a certificate by a client which said that the entire structure is completely movable, can be dismantled very easily and taken to someplace else, and can be erected again and used as it is with zero loss. If that is the case, then yes, trade will be allowed.
And even we can rely on safari retreats for Orissa High Court.
Yeah.
So next question is Rahul.
So what about Otis elevator case for lift being considered as immovable property?
I totally agree. There is that case is there, but I don't know what was the context. I still don't remember the context. But lift, I am
Otis
told.
elevator, in Otis elevator, they demanded excise duty, and contesting that, Bombay Tribunal or Bombay High Court said that this elevators are immovable property and excise is not applicable.
No, but Cohen overruled it, or in VAT or what? It said no works contract. Cohen elevator.
Yes.
So I guess that debate is settled. But let's keep that aside. If that lift is completely removable for ITC purposes, if you have a case whether excise is leviable or not, I don't know the context. But for ITC purposes, and it being not being a plant and machinery, because it is a part of the building and hence immovable, I don't buy that argument. Lift is completely removable. Intent is not to remove, I agree, but it is completely removable by nature of it, and hence I still believe it's a good case and ITC will be available. Can you remove this?
So next
Nishan,
question,
there is a window at the side. Can you remove it?
so now the next question is, we are setting up new factory, and for that we are using PUF panel, PUF panel in construction of factory for maintaining the temperature, and if vendor raise separate tax invoice for supply of PUF panel and for installation of PUF panel, then ITC is available or not? And if he raise combined tax invoice, then ITC available or not? So first question is whether artificially,
Can
yes,
you remove window, can you press that orange arrow? There is a window open on the right hand side.
Now,
No, it's not going.
so I guess it's not on this system.
No, but my just a sec. Acha, it was in mine. Okay. No, it's
Okay.
gone. We are setting up a new factory. For that, we are using POC panel in construction of factory for maintaining the temperature. And a vendor raised separate tax invoice for supply of POC panel and for installation of POC panel, then ITC is available or not. And if we raise combined tax invoice, see, if the POC panel is used and it becomes a part of that building, and it cannot be removed and without substantial damage, and it becomes a part of the involved property, then credit will not be available even if you buy it separately or through a works contract or whatever. So C and D both they cover all positions. Section says 17.5 C and D. So in my view, if they becomes a part, then no, credit will not be available.
Yes, Rahul.
There are 3-4 questions. I'll deal one by one. We are also installing HVAC and air conditioning package, means heating, ventilating, and air conditioning. In this also supply installation happen. So ITC available or not, it will be available. Firefighting, fire alarm package available. We are also installing fire safety systems. Here also it will be available. Electrical works. Now we are giving work order for electrical.
वाला क्यों यूज कर रहे हो? आपको पैनलिस्ट वाला लिंक नहीं?
Rahul, hello.
Yeah, he has been muted now.
Okay. Yeah. So for electrical works, there are two things. If there is an equipment that is coming, which is removable and it is movable by nature, then yes. But if it becomes the electrical works becomes, for example, the entire wiring that you do, it cannot be removed. By nature of it, it cannot be removed. Then credit will not be available. It becomes a part of the animal property. Yeah. So separate or combined will not make any difference.
Perfect. So I guess we have captured the questions till 5:15, and now I guess if you want to deliberate on some other aspects on transitional credit, a judgment of High Court, brand equity. If you want to share something on that, what's your view? What we should do? Is it available? Like, is it possible for us to get it now? Nitesh bhai?
Yeah. It's a perfect order. Supreme Court has already given a stay, so that is the law of the land as of now. But I believe that brand equity is correct. Credit will be allowed. Tran 1 credit should be allowed, and it is a vested right that I had, so they cannot stop it. That's it. The cess thing also, I think the retrospective thing, it cannot be retrospective. It's wrongly done. The credit will be allowed. The Krishi Kalyan cess and everything. So both, yes. I think I've covered everything. I will not take Rahul's time. So you can jump to Rahul if you have him.
So thank you very much, Nitesh bhai, for giving your valuable time and sharing your experience and views on this topic of input tax credit, which is of wide importance in this GST. And I guess if Safari reiterates, if everyone is able to read, then what it says for the construction input tax credit is that only that ITC is integral part of the GST. So once again, on behalf of Ahmedabad branch of WRC of ICI, we are thankful to you, sir, for sparing your valuable time. Now I request Rahul Maliwal to take it forward. for the second session. Yes, Rahul.
Of the session. Hello. So he's just joining within a minute.
Okay.
Is there only. Now Vatsal can give an introduction if we want to start.
Yes. Thank you, Rahul bhai. Now, on behalf of ICI Ahmedabad, I would like to introduce CA Rahul Patel. So, CA Rahul Patel heading indirect tax section and having expertise in the field of goods and service tax. He is entrusted with the responsibilities to look at the appeals and litigations, including drafting and appearances, advisory, etc. He started his practice in service tax in the year 2004. He has engaged with lots of corporates, government departments, PSUs, private business entities, and others. He has been closely associated with the Ahmedabad branch of ICI, Chartered Accountant Association of Ahmedabad, Gujarat Chamber of Commerce as the Indirect Tax Committee. So I would like to introduce CA Rahul Patel and a huge round of applause for CA Rahul Patel on virtual dais. So welcome you, sir.
Hello.
Hello.
Yes.
Yes.
Yes, Rahul bhai. Now
CA,
you can.
sir, are you listening? So now we will introduce CA Rahul Patel and huge round of applause for CA Rahul Patel. Welcome, sir, and continue this wonderful session.
Uh, Rahul bhai, Rahul Maliwal, can you give the theme of this topic of today's, that is inspection, search, and seizure and penalties?
Yeah, sure. Thank you. Thank you, Bishan bhai. So now the second session, the topic for the second session is the inspection, search, season, and the penalty. Because there are so many things that is going on under the GST, and we have the chapter number 14, which talks about the inspection, search, seizures. Due to the increasing cases of the inspection, search, and seizure, we must also aware what is the difference between the inspection, what is the difference between the access to the premises that is covered under section 72. So what are the rights that the assessee have, what the documents that the assessee need to check, which type of the forms, that is inspection 01, or which type the forms should be carried by the officer. For that we have the faculty CA Rahul Patel with us, and he is going to deal with this particular topic. So we are there is some technical issues, I think.
Yes. Friends, as you all are aware that we are facing this problem of search and seizure and inspection even under section 130, where trucks are being stopped, it has been seized, and we are facing the problem day in, day out. Rahul, what's your views about that thing? Can
So
you to
the
pay full tax and penalty at that time?
yes, truly said
What's
by
your
Bishan
views?
by the truly said by the Bishan by, because right now the most difficult phase for by the every SSC is handling section 129 and 130, because under 129 if they are even because of the silly mistakes, we are liable to make payment of the tax and the equivalent amount of the penalty. And if the case goes forward to 130, then they are also levying the redemption fine that is equivalent to the value of the good. So this is most difficult phase as a part of the SSA, because there is a circular by the department in case of the silly mistakes, like there is an invoice number or something like that. So there should be the levy of general penalty of rupees 1000, but they are still levying the full penalty of 100%. So the assessee need to take care of that particular part.
One more crucial point is that though the order has been passed by SGST officers in Gujarat, we are facing problem because the appeal mechanism is yet not started.
Yes.
So
That
we are also facing problem at that time. But sir, what's your views regarding this seizure by department?
Uh, Actually, my view is whenever the truck at the border are seized, there is a lots of penalties and lots of difficulties for the businesses and lots of corporates. So now we will see how CA Rahul Patel will solve these problems and understand about this topic.
yes, Bishan bhai. One more, as you said, one more addition to that the filing of appeal. Because, for example, if the person is registered in Gujarat and his truck is being intercepted in the Maharashtra, now if I need, the order has been passed by the Maharashtra officer, and they will issue a temporary GSTN number to you for making the payment of the penalty. In that particular case, you need to file the appeal over there. So the filing of the appeal is also one of the big issue. Now, right now they are issuing the temporary number. Earlier they used to issue only the DRC 03. They are not issuing the DRC 07. So that the appeal was also used to be filed in the mechanical.
We are having
Bishan
Rahul
bhai, you
bhai
can
with
add
us.
something on the
Yes.
appeal mechanism.
So we have Rahul bhai with us,
Okay.
and as we are habituated with this GSTN and technical glitches, we had faced a technical glitch, and that's why Rahul bhai we had some delays. So Rahul bhai, now we invite you to deliberate and discuss your topic. Rahul bhai, thank you very much.
Thank
Thank
you
you.
very much, Bishan bhai. Thank you very much, Rahul bhai, Vatsal bhai. Friends, my sincere apologies at the outset for this delay, which was absolutely beyond my control. I really need and deserve an immunity. And I believe none of you are going to impose a penalty for this delay. At the outset, friends, I'm grateful to the Ahmedabad branch of WRC of ICI for organizing this wonderful session. Despite of the rough time we are passing through due to the COVID, our endeavor has always been to enrich our knowledge in one or other way. And for that, the entire team of the Ahmedabad branch must be congratulated. Friend, today's topic are you able to see my presentation?
Yes, Rahul bhai.
Yeah, but I am not able to see that. Okay, friends. Today we are going to discuss these 5 points that is relating to the access, summons, inspection, search, seizure, and penalties. Friends, normally it is believed that when we have a law of land, everyone would like to obey the law, and there is no need for any punitive measures or the preventive measures. However, I would share a small example before I start. I used to say this to many of my friends, in fact. सर हमारे शास्त्रों में, पुराणों में सब जगह पे ये लिखा हुआ है कि चोरी करना पाप है. At the same time, it is also mentioned in the CRPC and IPC, चोरी करना is a punishable offense और चोर को punishment होगी. क्या हम हमारे घर के दरवाजे के बाहर ये 2 बुक्स रख दे, एक हमारे जो शास्त्र है वो और दूसरा CRPC and IPC, और एक बड़ा सा बोर्ड लगा दे वहां पर कि चोर को चोरी करने से पहले ये देखना है, ये पढ़ना है कि चोरी करना एक पाप भी है एंड पनिशेबल ऑफेंस भी है. क्या चोर चोरी करना बंद कर देगा? क्या इसका मतलब ये है कि हम दरवाजे को ताला नहीं लगाएंगे? अगर ऐसा किया तो इन माय ओपिनियन उसको मूर्खामी बोलेंगे और उससे ज्यादा कुछ नहीं बोलेंगे. So even if there is a presumption that every person, every citizen of the country is abide by the law of land and is expected to obey the law and the regulations, there is a possibility of infringement, violation, and for that reason, there is a need for punitive measures as well as preventive measures. And our today's topic is concerning with this punitive and the preventive measures, which are embedded in the GST. We will be discussing various points relating to the preventive and the punitive measures, that is access, summons, inspection, search, seizure, penalties. फ्रेंड्स, मैं इसे ऐसे बोलूंगा कि पहले हम विंड, पवन की मात्रा जो होती है उसको डिस्कस करेंगे, उसके बाद स्टॉर्म डिस्कस करेंगे जिसको हम तूफान बोलते हैं, और उसके बाद हम डिस्कस करेंगे साइक्लोन. The access is something like a wind, inspection is like a storm, and the search is like a cyclone. And that many of us would have recently faced. Friends, before we start, about understanding what are the provisions, what are the powers given to the departmental officers, it is necessary to understand the administrative machinery. As we understand and as we very much aware of, there are two departments working in the same subject matter of taxation. That is Central GST Department and the State GST Department. Initially, when the GST was supposed to be rolled out, there were a lot of issues about the allocation of the taxpayers between the central and state, division of the work between the central and state, and finally, it was decided the taxpayers would be allocated to central or state so far as administrative requirements, administrative functions were concerned, like registrations, etc. However, it was later clarified. In fact, the decision was also taken in the meeting of the GST Council, and thereafter it was clarified that so far as intelligence-based enforcement functions are concerned, like search, seizure, preventive, inspection, those functions have to be discharged by both of them. So the central will also discharge that function and the state will also discharge that function. Hence, it is very much necessary for us to understand how the central will function, what are the administrative machinery of the central, and at the same time, what is the administrative machinery of the state department. Friends, central, those who are very much practicing with the service tax law are aware that the central department is nothing but the Central Excise Department, and there are various sections like Executive Commissioner, who is primarily responsible for the general administration, tax compliances, and preventive measures. Over and above Executive Commissionerate, there is an agency that is known as Directorate General of Central Excise Intelligence. Now it is named as Directorate General of Goods and Service Tax Intelligence. That is DGGI, which is an independent agency, though forming part of the same board, CPIC, but it is an independent agency and functions independent of the Executive Commissioner. If I'm talking about the jurisdiction, the Executive Commissioner is having a local jurisdiction like the Ahmedabad Commissioner, and in Ahmedabad we have 3 commissionerates. One, that is Ahmedabad South. Second, Ahmedabad North. These 2 commissioners are dividing the jurisdiction based on the geographical area. And thereafter, there is another commissioner that is known as Gandhinagar Commissioner, which is having the jurisdiction over the Gandhinagar and the district or the places falling within the district of Gandhinagar. Apart from this, we have the ADG office in Ahmedabad that is part of the DGGI. But the important distinction between the Executive Commissionerate and the DGGI or DGCI is on the jurisdiction. So far as Executive Commissionerates are concerned, they have a local jurisdiction, as I said, whereas DGCI or DGGI is having pan-India jurisdiction. So any of search party of the DGCI office Ahmedabad can travel to even Hyderabad and conduct the search and operation there. They don't require any extraterritorial jurisdictional permissions. Besides that, in Ahmedabad we have another commissioner that is dedicated for the audit mechanism, whose role is to conduct the service tax audit or now the GST audits, and that commissioner is known as Ahmedabad Commissioner for Audit. So this is what the central machinery is. On the other side, in state, there are no different commissioners because the entire state is having single commissioner and is headed by the chief commissioner of state, Gujarat State GST. And under that, there are different sections, divisions, ranges. However, equivalent to the preventive of the central machinery, they have a division which is known as an enforcement. So normally when we talk about the inspection or search, we are expecting the people from either preventive wing of central, DGCI or DGGI office of central, or enforcement wing of state office. However, audit will be conducted by audit sections. And so far as access to the premise is concerned, that is in section 71. Either the division office of the central or the division office of the state can also undertake. Friends, before we jump to the detailed discussion about what are the provisions related to the inspection, search and seizure in the GST law, it is very much necessary to understand certain basic documents, importance of the basic documents, which we will have to deal with as a consultant during the course or even during the course of search or the course of the investigation. Friend, in this investigation process, as a chartered accountant, we play a very vital role. I will not comment anything whether the role has been properly or duly recognized or not, but there is a very important role as a chartered accountant we need to play. It has been well said that the chartered accountant is a partner to the national building process, and being a chartered accountant, it is our indeed responsibility to act as a neutral, unbiased person to breach the differences and the gaps between the trade and the revenue. It is our responsibility to ensure that the two ends of justice are met. It is our duty to consult, to advise our clients to adhere to the compliance procedure, to ensure proper compliance of the law. At the same time, it is our duty to ensure that there is no victimization. And therefore, I consider a role of a chartered accountant as a very prominent role in this entire process. Whether we are available in the field during the course of search or we are consulting them after the search is over and during the course of investigation. Now, coming to the importance of the documents which I have stated in the presentation. The first document is a Panchnama. Friends, today I am trying to cover the basics of this investigation or the related procedures. At the same time, I will try to take you to the bit of advanced level. So I presume that there are people, there are attorneys who are not so acquainted with this process, and for that reason, for the sake of their benefit, I'll also discuss what is Panchnama, inventory statement, summons, and all. Friends, the Panchnama is the first document which is being drawn at the search premises or the premises which is being inspected. It's a very crucial document. The copy of the Panchnama is always shared with the SSE. There is a myth that the Panchnama copy should not be shared. However, the fact is that the copy of a Panchnama has to be shared with the SSE, with the taxpayer, whereas the copy of a statement cannot be shared unless it is used against the taxpayer. So many times it happens that the search or the inspection is being carried out, the Panchnama has been drawn, and the people are not ready to share a copy of Panchnama. So we must advise the SSE that the copy of Panchnama must be asked for, must be collected, And if it is not being given, then a written request can also be given to the concerned officer to provide the copy of a concern, because that is a basic document based on which the entire case of the investigation will stand according to our side. Then it comes to the inventory. If there is any seizure, if there is any impounding of the material, whether it books, goods, or something else, then it is the duty, it is the responsibility of the search party to prepare an inventory containing all the details of what has been seized or impounded. So the copy of inventory is also equally important, and that must be shared with the SSC. Then comes to the statement. Statement is like a Bible according to me. The entire case would stand on the facts and the assertions made in this statement. You must be aware that the statement is being recorded on oath. The statement is being recorded in pursuance of a summons issued by the proper officer as per section 70, who is enjoying the powers equivalent to the powers given to the court under the civil procedure code. So the statement is very much relevant and very much important document, and that we need to refer to. Then it is about the summons. Summons is the proper authorization, I would say, to record a statement, to call for the information, to call for the attendance of a person, and the summons is being widely used in the tax department nowadays. And the copy of the summons must be furnished to the SSC. Then it comes to our role, the inquiry with the taxpayer and all related persons. Friends, when we indulge into an investigation process to advise our client, it is our duty, as I said, it is our duty to ensure that the ends of the justice are met. There is no victimization. What should have been done is properly done. So at the same time, as a consultant, it is very much necessary for us to understand, to inquire with our client, with the taxpayer, as well as all the persons concerned with the investigation. It may be an accountant, it may be a staff person, it may be a transporter, it may be an angadia, it may be a peon, it may be a driver, it may be a puncher. Examination or the inquiry with the punchers is equally important. So these are the few basic things which we need to keep in mind, and the importance of which is of great nature so far as investigation is concerned. Friends, whether we talk about the inspection or access or or the search and seizure, everywhere in section 67 or 70 or 71, they have used a word proper officer. So it is very much necessary for us to understand what is the definition of a proper officer, which is given in section 291. I'm reading out the definition which is given in 291 here. That in relation to a function to be performed under the Act, the commissioner or the officer of the central tax or state tax, who is assigned that function by commissioner in board, who is assigned that function by the commissioner under state GST. So basically the formation of a proper officer is that all the officers have to be assigned a specific role. Obviously, it is needless to say that the officers have to be appointed as such in the commissioner. If we look at the hierarchy, commissioning from the CBIC, that the board will issue a notification for the formation of different commissioners and the directorates. Thereafter, various officers will be posted and delegated the authority for a variety of functions. So appointment, rather than the appointment, what is important is the function for which he has been deputed. As I said, that we have a division in the central office in the executive commissioner. At the same time, we have a preventive section in the commissionerate. In both these sections, at the lowest level, there is an inspector who is working. Above the inspectors, there is a superintendent who is working. Above the superintendent, there is an assistant or a deputy commissioner who is considered as a head of that section. If it is a division, the AC or DC is the divisional head. If it is a preventive section, the AC or DC of preventive is the head of the preventive section. And above that, there is a supervisory or controlling authority, which is in the rank of joint commissioner or additional commissioner. But an assistant commissioner who is deputed in the division is having a function which is limited for the divisional activities, like to ensure the revenue collection, to take and grant the registrations, to take the returns, to resolve the issues relating to the returns and the proper regular compliances. These are the different functions to be performed within the division. On the other side, preventive section is having a function of preventive measures. He needs to conduct the search, he needs to issue a summons, he needs to investigate and examine the cases. So these are the duties and the functions of a preventive office. So merely because there is an assistant commissioner in the division office and there is an assistant commissioner in the preventive office, functions of both the assistant commissioners are not same according to me. So if the preventive section assistant commissioner is empowered to conduct the preventive measures, in my opinion, the definition of proper officer would not include insofar as section 67 is concerned the assistant commissioner or even the superintendent sitting in the division office. So the proper definition of a proper officer has to be read in relation to the function which has been entrusted to them. Similarly, in state GST, there are different sections. So a divisional office of the state GST cannot conduct a search. If he is conducting a search without proper authorization, he is not a proper officer and the entire proceeding would be vitiated, would be invalid. So for that reason, the definition of a proper officer is very much important and we need to understand who is the proper officer. Then I would like to refer to a letter which was issued by the CBEC dated 5th October 2018. As I stated in the beginning that there were an issues relating to the bifurcation, allocation of the taxpayers between central and state. But by virtue of this letter, the CBEC has made it very clear that both the offices, both the central department and the state department are empowered to conduct intelligence-based enforcement activities. Even if the taxpayer has been assigned to the state office, somebody from the central preventive or the DGCI are equally empowered to conduct the search and start the investigation. However, it has been clarified in the letter that if the investigation has been initiated by one office, the entire procedure has to be completed by the same office. Later on, that matter should not be transferred to the other office based on the allocation of jurisdiction. At the same time, I would also draw your attention to the provisions of section 6(2)(b) because whenever we talk about the concurrent jurisdiction, there is a chance of overlapping. If the central office has initiated a search against a taxpayer on a particular subject matter, then there is a provision in the statute that is 6(2)(b) which ensures that the other counterpart shall not initiate the proceeding for the same subject matter. And that is very much necessary. Otherwise, there would be a parallel proceeding and that would cause nothing but the harassment. So it is very much embedded in the statute itself that once the investigation has been initiated by one department, another department is not empowered to initiate the same investigation for the same subject matter. Yes, it could be a different story if the investigation has been based on a specific intelligence. However, the other office is having another intelligence and initiating second investigation. So in that case, the subject matter would be different and both the offices would be empowered to conduct the investigation. But insofar as general or roving inquiry is concerned of the same issue the subject matter is of the general verification and examination of the financial statements, books of accounts, then in my opinion, if one office initiates the action, the another office would not be able to initiate it. Friends, another important aspect which we need to understand and keep in mind while dealing with these notices and the inspection procedures is about the coding of dean. You are very much aware that recently the CBIC has introduced the system of putting a document identification number. There is a circular that is 122/41/2019, which has been issued under section 168(1), and which is nothing but a direction, and it's a mandatory direction that any search authorization, summons, arrest memo, inspection notices, or even letters in the course of inquiry must not be issued without generating a DIN number and quoting that same DIN number in the letter. That means any summons or even a notice to call for the information or a document has to bear a DIN number on the face, prominently on the face of that particular summons or a notice. If the DIN number is not generated, or if it is not mentioned on the document, that document should be treated as invalid document, and the circular says that it will be deemed that the letter or that particular document was never been issued. This instruction will have an effect from 8th November 2019. And the facility for verification of DIN number is made available at the website of CBIC. So any person who is having a letter and the DIN quoted over the letter can go and check whether the DIN number really exists or not. He can also check that on which date the DIN number was generated, and then you can match the DIN number along with the date of issuance of that particular document. According to me, if the letter, because the bodies of the circular are that they need not issue, they cannot issue the summons or a notice without quoting a DIN number on the letter. They have not used the word service. So in my opinion, if the notice has been issued on 10th of April 2020, the notice is dated 10th of April 2020, it is deemed that the notice was issued on 10th of April 2020. It might have been served on the SSE or a taxpayer on 20th April 2020, and in between on 13th or 14th or 15th of April 2020, the department, the officer who is issuing the notice might have generated DIN number. So if I go and check at the portal, what is the date of DIN, and if it turns out to be 15th of April, according to me, the entire notice will be treated as an invalid notice. So that is, as a consultant, that we need to understand and we need to point out as and when necessary to the client. I'm not saying this defect has to be identified for the sake and the benefit of the client. My point is, if there is a defect, it must be brought on record. It must be informed to the concerned officer that there is a defect in this letter, and the alternative remedy can be taken, so that whatever procedure has been adopted by the revenue as well as trade must be within the four corners of law. There are some exceptions also given, and that exceptions are relating to the technical difficulties. Obviously, without exception, we cannot have any rule. But here in circular, they have limited it to very few situations where the DIN number could not have been generated because of a technical difficulties. Then the number should not be quoted. Or if there is any emergency or a very urgent situation, like the officer is at the field and he is supposed to issue a summons to a person. So being outside his office on official duty, he won't be able to generate the DIN number. So in such a scenario, notice or the summons can be issued without a DIN number. However, a proper approval has to be taken by the particular officer from the immediate superior officer within a period of 15 days. And the DIN number has to be properly printed and kept in the file, and that is the obligation which has been casted on the revenue officers. Friends, now we'll deal with the first situation. So that what I said as wind, just a windy situation, nothing more than that, and that is a power for physical access to the premises. Friends, the provision is in section 71, and there any inquiring officer, that could be any officer under the act, who has been authorized by the proper officer, but the proper officer shall not be less than a rank of a joint commissioner. So either of the joint commissioner or additional commissioner can authorize any officer who is acting under the act to access to a place of business of a registered person. There is a purpose why the inquiring officer should be allowed an access to a place. So the purpose is to carry out any audit, scrutiny, verification, or checks to safeguard the interest of the revenue. In my opinion, friends, section 71 can only be used when there is a pending procedure. That may be a summary assessment, a scrutiny of return under section 61. It could be a non-filer assessment under section 62. It could be a proper inquiry under 67. But normally, when the 67 has already been invoked, there is no need for 71. You can always invoke 67.1. There could be an audit by the audit officers, who can also be given power under section 70, who can also be given the authorization to have an access to the place of business of the registered person. Or there is a special audit by a chartered accountant or a cost accountant, who can also be empowered or authorized to have an access to the premises under section 70. But existence of that proceeding is must in my opinion. If there is no such proceeding, there is no such inquiry, it is not possible to authorize. Section 71 does not permit the authorization by the proper officer to any other officer to have an access to the place of business. Another important aspect which needs to be kept in mind is that only and only place of business of a registered person can be accessed. Under section 71, the proper officer cannot authorize access to any place other than place of business. It has to be a place of business which is defined in the act, from where the supply is being made, and then only access can be gained. However, it is needless to say that it does not apply to the access to the residence of the partner or the director or the proprietor, unless that residential premise has been declared as a place of business or is being used as a place of business. If that is so, then there is no other way but the section 71 authorization can be given. Another important aspect is that this authorization has to be given in respect of a registered person. If a person is not registered, powers of section 71 cannot be used. Now, friends, for what the access is to be given? So there are certain purposes for which this access is available, and the purpose is to inspect books of accounts, documents, computers, computer programs, softwares, whether installed in a computer or otherwise, or such other things as may be available at such place. Friends, everywhere in section 71 or even in 67 or even in 122, you will find that whatever we can think of, whatever we can imagine of, has been attempted to cover. So he has been given power to inspect the books of accounts and documents. And the documents includes anything which is printed. So whatever records the taxpayer has maintained as per rule 45-46 of the GST rules must be allowed to the inspecting officer. Not only that, the computers and the computer program shall also be given. Those who were practicing with the service tax and especially with the service tax audit were aware that under the service tax law, only an access to the books of accounts and records were permitted. Access to the computers were not permitted, except search. We are not talking about the search cases, or now we are simply talking about the access. So there, as per the rule, it was specifically mentioned that the access can be gained to the books of accounts, records, or the records which are generated through computers. However, the officer will not have an access to the program. Like your person is using a tally, then the officer cannot compel the SSC to give an access to the tally. He can always demand the printouts or the reports generated through tally. But there is no need, there is no legal compulsion to provide the access to the tally or to any ERP software. However, in GST, the words computer programs and softwares are specifically used. So, in my understanding, access to the ERP system or to the tally's software cannot be denied under Section 71. At the same time, the list includes all other things as may be available at such place. That means any other document which is available at the premises must be given access. However, if we read the provisions literally, if we try to interpret it, then as per the principle, the doctrine of ejus in generis, such other thing has to be interpreted from the preceding words. That is books of accounts and documents. It must take the color from the books of accounts and documents. It does not mean that anything which is lying there in the premises can be accessed. I am of the opinion that officer inspecting under Section 71 does not have an access to the mobile phone of the SSC. They will not have any access to anything which is not in the nature of books of accounts, documents, or records or invoices. If there is a property paper, the sale deed or a conveyance deed, the title documents of the proprietor of the taxpayer available in the premises, the officer does not have a right or a power to gain access to such documents which are not relating to the businesses, and those are not covered by the provision. Another important aspect which needs to be borne in mind is that these documents must be available at the place which is being inspected. SSE or a taxpayer cannot be compelled to produce a document which is available at other premises. They cannot be compelled to bring the documents from other premises, then produce before the officer for verification or inspection. Inspection is limited to what is available there in the premises and on the very same premises. Sometimes it happens that the books of accounts would have been sent to a chartered accountant for audit, or the books of accounts are sent to the accountant's office. Then in such a scenario, the officer does not have a right to call for those books of accounts from the chartered accountant's office or the accountant's office. Under 71, at the most, he can demand those records which needs to be produced by the taxpayer within a period of 15 days or such other period as may be extended by the proper officer. Besides that, the person is also under obligation to produce the records which have been prepared or maintained by him as per the rules. A trial balance or equivalent, audited annual financial statements, cost audit report, income tax audit report, or any other relevant material. So these are the documents which have to be produced by the taxpayer before the officer on demand within the specified period of 15 days. Friends, now I'm moving towards the powers relating to the summon. It is contained in Section 70, which is of extreme importance in any inquiry, in any investigation under the tax law. Again, Section 70 has to be exercised by the officer who is acting under the Act. However, there is no pre-authorization required. Section 70 is slightly different than Section 71. In 71, as we said and as we discussed, there is an authorization needed from the proper officer who should not be below the rank of a joint commissioner. However, in case of Section 70 summons, there is no such authorization required as per the statutory provisions. If the authorization has to be taken, that has to be taken as per the internal discipline. Like in earlier days in the excise regime, we had an instruction that no summons has to be issued without prior approval of assistant or deputy commissioner. Later on, that condition was done away, and thereafter it depends on the head of the commissioner to decide the modus operandi, whether the prior approval of the superior officer is needed or not. But so far as statutory restrictions are concerned, there is no such restriction. There is no prior approval needed. Now, summon can be issued by officer to require the attendance of any person to give evidence or to produce document or other thing. If we look at the provisions, it is to require an attendance. This is not to call for the records. Primarily, it requires an attendance of a person to whom the summon has been issued. And then he may be required to attend to provide for the evidences or the documents or the things. These may also include to offer an oral statement, which may be recorded as a statement. And the summon can be issued to any person. It is not necessary that the summon has to be issued to a registered person or to a taxable person or to a director only or to the chief financial officer of the company. A summon can be issued to any person. However, there is a protocol that normally the summon has to be issued to the concerned person. Like if we have a corporate, then in that case, it is not advisable to issue a summon to the highest person who is sitting in the top of the company. That may be a chairman or the managing director. If there is a other proper officer available in the company, it is advisable to summon the presence and the attendance of that concerned person. Like he could be a chief executive officer, he could be a chief financial officer, he could be a chief tax officer, he could be any other subordinate to these key managerial persons. Moreover, the powers relating to the summon, as I said in the beginning, are equivalent to the powers given to the civil courts under the Civil Procedure Code. And this entire proceeding is to be treated as a judicial proceeding as per the provisions of Section 193 and 228 of the Indian Penal Code. Friends, it means that they are trying to equate the proceeding with the proceeding of a civil court. So if there is any false representation of a fact, if there is any introduction of an evidence which is false, then the punishment as per the Indian Penal Code can be involved. Section 193 of the IPC is nothing but the punishment in case the false statement is made before the officer. And the punishment is up to 7 years or fine or both. Similarly, in Section 228 of the Indian Penal Code, the punishment is relating to the insult which has been caused by, or a sort of an obstruction which has been caused by any person to the officer who is acting in the judicial capacity. However, there is a small lacuna in my opinion. If we read the provisions of Section 72, in which this deeming fiction has been incorporated, it is provided that the inquiry under 71 shall be deemed to be a judicial proceeding within the meaning of Section 193 and 228 of the IPC. In my opinion, it does not borrow the entire provision of 193 and 228. It merely deems that the proceeding shall be treated as a judicial proceeding, nothing more. So if there is any infringement, if there is any false introduction of an evidence, no punishment can be invoked under Section 72. However, it can always be invoked under Section 193 and 228 as such independently by way of a prosecution, by way of a criminal complaint. Because there are many other provisions like Section 176, 177, 178 of the IPC Act, which are dealing with the many situations where there is a false introduction of the in evidence or false supply of the informations are involved, and all such offenses are punishable offenses, and that provision is independent. It can always be involved. But so far as section 72 is concerned, it does not empower the officer to impose a penalty or a punishment immediately under section 72. Why I'm referring to this is because many times you see the summons. At the bottom of a summons, you will find these words. These are false introduction of the information of the evidences are punishable under section 193 or 228 of the IPC and all. This is absolutely true. But the procedure of punishment would be different. It cannot be summarily invoked under section 70 or under any of the GST provisions. In my opinion, in order to punish, they have to knock the doors of the court. They need to invoke the procedures as per the criminal procedure code. It cannot be invoked under the GST law. Friends, another important provision relating to the summon under GST law is section 136, wherein it has been laid down that the statement which has been offered under section 70 can be admitted as an evidence under these specified circumstances. However, 136, the provision of 136 is dealing with only prosecution and not otherwise. So in my opinion, the provision of section 136 will not apply unless and until the person is being prosecuted for an offense. So if there is mere investigation or there is an adjudication without a lodge of prosecution against the particular person or the SSE or the taxpayer, statement cannot be relied as an evidence under section 136 of CGST. However, it does not mean that the statement does not have a validity. Friends, we must have watched that movie Jolly LLB 2, wherein the defense counsel argued before the court, referring to a police officer, कि आपको इतना भी नहीं पता 3 सितारे लगा के बैठे हो कि पुलिस को दिया गया स्टेटमेंट की कोई वैलिडिटी कोर्ट में नहीं होती. फ्रेंड्स, वो मूवी तक ठीक है. So far as statement before a police officer is concerned, that may be a true understanding. But coming to the taxation, the statement offered to the tax officer is not equivalent to the statement which has been offered to the police officer. This statement has proper validity. This statement can be admitted, can be used against the SSE. So if there is any confessional statement made, the SSE or a taxpayer would not be able to escape. However, there are provisions, not the provisions, but there are procedures to retract a statement. And there is a guideline from various courts, including Supreme Court, that how to deal with the retraction of a statement. But primarily, unless proved otherwise, unless refuted, it has to be borne in mind that the statement given to the tax officer is admissible evidence and can be used against a taxpayer. So if there is any false fact being reproduced in the statement, then it is required to be corrected. It may be due to a mistaken belief, it may be due to ignorance, it may be due to coercion. But whatever may be the reason, if there is any false information given in the statement, if there is any false assertion in the statement, that has to be retracted, rectified, modified, or altered at the earliest. Otherwise, that fact can be used against a taxpayer. Friends, another type of a statement, and that is the statement of the witness. That is not the statement of the same person, that is a statement of the person other than the person who is being investigated. Like in case of an investigation of clandestine removal, it has been alleged that the supplier has supplied the goods without invoice, and on which tax has not been discharged. The revenue has proceeded to record a statement of the recipient. The recipient has admitted in the statement that recipient has received the goods from the supplier without invoice. This type of statement can also be admitted against the supplier. However, there is a protocol that the opportunity of a cross-examination should be granted to the supplier when the statement of the other person is being used against him. But please keep in mind that this provision is not automatic. It's not mandatory in all cases. The opportunity for cross-examination must be demanded. So as a consultant, we need to advise to the client if there is any such false statement given by other person. The very first thing to be done at the level of an adjudication or other proceeding is to demand cross-examination of the person who has stated the facts otherwise. Friends, there is a decision of Dariwal Industries wherein it has been categorically laid down by the court that when the opportunity of a cross-examination has not been offered when demanded, that statement cannot be treated as a statement which has been made in the court and cannot be relied as an evidence. So this is the significance of demand for a cross-examination. There is another principle which needs to be borne in mind, that the burden to produce the witness for cross-examination is on the revenue. That is CCE versus Vishnu and company. It is the department who has to produce the witness. Like in our example, if the recipient has made a statement that the goods were received, now the supplier is not in position to find out the recipient, is not able to call the recipient for correction of the facts before the proper officer, then the supplier can always request the officer adjudicating authority to call for the cross-examination, to call for that recipient and afford an opportunity of cross-examination. It is the burden which has been casted upon the revenue. It is not the burden of the SSE to produce that particular person which needs to be cross-examined. But at the same time, it has to be kept in mind that the cross-examination of a person who has not been relied upon in the charge sheet or in the show cause notice can also be denied. Because if the recipient statement, like in our example, if the statement of a recipient has not been relied upon in the notice, has not been framed within the part of the allegations in the notice or in the charge sheet, the court said there is no need to offer a cross-examination. Friends, how this is relevant? Let me take this example ahead. In our example, the contention of the supplier is that he has not supplied the goods. Contention of the recipient is that he has received the goods. Now, all the goods which is otherwise supplied by the supplier to the recipient under the cover of invoice when normally being transported through particular transporter. So a statement of a transporter may be relevant here, that all the supplies by the supplier to the recipient were transported by him. However, he did not transport such material which has been alleged in the notice or which has been admitted as having received by the recipient. In such a scenario, obviously, the department would not call for the statement of the transporter. So in that case, supplier will not be able to, obviously, because for that reason the transporter statement would not have been taken, and there is no reliance so far as transporter is concerned in the case. So in such a scenario, cross-examination cannot be permitted. Then what is the remedy as for the sake of the benefit? In such a scenario, the remedy which is available to the supplier is to offer an affidavit. He can always take an affidavit from the transporters deposing all the correct facts, clearly mentioning that he has transported all the goods which have been supplied by the supplier during the period involved. However, he has not transported any such goods which has been claimed to have been received by the recipient. And that affidavit can be produced before the adjudicating authority or before the proper officer during the course of proceeding. And that affidavit must be admitted as an evidence by the officer. Another important aspect relating to this statement is the confessional statement. Friends, when there is a confession given, in such a case, unless it is, as we discussed initially, unless it has been retracted, it can be admitted as an evidence, can be used against the taxpayer. However, there is a protection available in Article 23 of the Indian Constitution that the confession or the statement of the same person himself cannot be used against him. But it needs to be kept in mind that provision, that the benefit or the immunity is available insofar as prosecution is concerned, that is not available for any matter other than the prosecution. Article 23 will apply only in a proceeding of an offense where mere confessional statement is not sufficient. The corroborative evidences have to be gathered by the officers and need to be produced before the court in order to inflict punishment on the taxpayer. Now, coming to the retraction of statement, friends, initial burden of proof as to the statement by coercion is on the revenue. If the statement is retracted, it is the revenue who has to prove that the statement was not taken under duress or coercion. This concept is based on the concept of presumption of innocence. This principle of innocence was borrowed by Honorable Supreme Court in case of Vinod Solanki versus UI 13 STR 337. Based on that principle, Honorable Court decided that it is the burden, the onus to prove that the statement was not taken by coercion is on revenue and not on the SSC. But please keep in mind that this benefit is available only in a case the statement is retracted. If the statement is not retracted, later on it cannot be argued that the statement is wrong and department or the statement was taken under coercion and the onus be shifted to the department. Friends, it is also required to be understood very well that the mere retraction is not sufficient. The directions have been given from time and again by the courts that the retraction has to be carefully considered. It has to be considered in line of the other circumstantial evidences and the corroborative facts. Everything is to be considered by the court like a time, nature, and manner of retraction. If the statement is being retracted after 5 years, that retraction will have no validity. So it is very much important that the retraction has to be made immediately in a proper manner, and the retraction has to be based on certain evidences. It is not just the retraction, the simple letter to retract the statement has been filed with the officer. That will not be sufficient. As I said in the statement, in the presentation, the retraction has to be prompt, plausible, persuasive, and proper. Why it has been retracted, the reasoning must be stated. What exactly is to be retracted, that has also to be stated in the retraction letter. What material is being relied upon by the person who is retracting the statement, that has also to be supplied along with the retraction statement. And as I said, if if it has been promptly and properly been retracted, the court will have to definitely consider the retraction, and the original conventional statement will carry no value. Friends, coming to inspection now, section 67(1). 67(1) is basically authorizing the officer to inspect the place of business. However, I don't find a big difference between 67(1) and 71. I believe that the requirement of a 71 could have been done away with the provision of 67(1). But the only objective which I could see for introduction of 71 is that the other officers like audit officers, chartered accountant, cost accountant must not be allowed the powers of 67(1), and for that reason a separate machinery is being carved out for those people under section 71. If we carefully read 67(1), it is slightly different. Again, the same procedure, there has to be an officer who can be authorized. That officer must be acting as an officer under the act. It could be an inspector, it could be a superintendent, it could be an assistant commissioner, it could be a deputy commissioner. And the authorizing officer has to be the proper officer, not below the rank of a joint commissioner. So only a joint commissioner or higher rank officer can authorize other person to conduct inspection under section 67(1). No assistant commissioner or a deputy commissioner can authorize his subordinate superintendent to conduct the inspection under section 67(1). Now, friends, what has been allowed in 67(1)? That is the inspection of any place of business. Even under section 71, the access was allowed to a place of business. Here, the same way, the premises has to be the place of business, and then only it can be allowed under 67(1). However, the important difference between this and that 71 is that here the inspection of a place has been allowed. There it was mere an access to the place was allowed. So the inspection is wider in terms of power. Under 67(1), the inquiring officer have a power to inspect thoroughly the entire place of business. As I said, that under section 71, he cannot have an access to the mobile phone. That may not be the situation here in 67(1). He has got a power to inspect anything, the entire place of business, and it includes everything which is falling in the place of business. Another important difference is that this power has to be exercised with reference to the business place of a taxable person. Under 71, it was limited to the registered person, whereas here it is talking about taxable person. That means whether or not the person is registered, the place of a business can be inspected under 67. So even if a supplier is unregistered, having a turnover below 20 lakh rupees, and according to him, obviously according to the supplier, because of the turnover less than 20 lakh rupees or the 40 lakh rupees, whatever the case may be, he has not registered himself. However, the officer is of the opinion that his total turnover is crossing the limit and he is required to be registered. He is liable to be registered, and therefore he is a taxable person. In such a scenario, 67(1) can be used for the inspection of the place of business. At the same time, this provision can be invoked in respect of the transporter who is transporting the goods, owner or the operator of a warehouse, godown, or other places where the goods are being stored. So this authorization, this power can be exercised with respect to persons other than taxable persons also. Now the purpose. Why this authorization or the powers should be exercised or should be given? The law says that if there is a separation, if there is a tax, if it is respecting to the taxable person and there is a separation of transaction relating to the supply of goods or services or stock on hand, or if the taxable person has availed excess ITC, or he would have indulged in contravention of the Act to evade payment of tax. In such a scenario, 67(1) can be utilized. Friends, before that, it is necessary to understand that the law requires the proper officer to have a reason to believe. Obviously, unless and until the premises are inspected, they will not be able to decide whether the transactions have been suppressed or not, or to what extent the transactions have been suppressed. However, there is an additional obligation casted upon the proper officer before authorizing the other officer to conduct the inspection under 67(1), and that is, he must be having a reason to believe. He must have a reason to believe that the taxable person has indulged into contravention of Act to evade payment of tax. Now, what is reason to believe? We understand that the reason to believe is different than the belief. A mere belief is not sufficient. However, it is different, slightly different than section 148 of the Income Tax, 147 of the Income Tax Act, where there is a reason to believe after, based on the or the consequences of the information which has been possessed by him. Here, no such words have been used by the Parliament. What they have merely mentioned is that there has to be a reason to believe that the taxable person has suppressed. So that is an important condition which the proper officer has to satisfy before giving an authorization, without which that authorization would not be a valid authorization. Again, the suppression. Now, what is called suppression is also important. So normally, friends, this word we have come across in section 73(1) proviso of the Finance Act 1994 and section 78 of the Finance Act 1994. Suppression was one of the allegation which could have empowered the officer to issue a show cause notice for for an extended period, that is up to 5 years, or an imposition of a penalty under section 78. There are category of decisions where it has been laid down by the honorable courts that the suppression has to involve deliberate withholding of information. In case of Anand Nishikawa Company, Honorable Supreme Court 2005 188 ELD 149, it has been laid down that mere non-disclosure of information is not amounting to suppression. It has to be a deliberate withholding of information. Suppression means prevent dissemination of information. If that is so, then only it can be said to be suppressed. So if the information, like in case of an ITC-04, we were supposed to file ITC-04 for a long time. However, due to the system issue, ITC-04 were not being filed. So in that period, if the person has not filed the ITC-04, the person has not disclosed the transactions relating to the job work to the department because there was no need. In such a scenario, it cannot be argued, it cannot be alleged on part of the person, on part of the taxable person, that he suppressed the transactions relating to the job work. Because something which was not required to be disclosed can never be treated as suppression. Borrowing the same principle here, if there is a transaction involving supply of goods and services which has not been disclosed to the department, which was supposed to be disclosed, on which the tax was liable to be paid, and as it has not been paid, then only that amounts to a suppression of a transaction. If a transaction was not required to be disclosed to the department for any reason, then the allegation of a suppression of such a transaction is not viable. Coming to the ITC claim in excess of entitlement. Friends, according to me, this is the draconian condition. In the first scenario, in the first situation, there was word suppression used, which was grave in nature. Whereas, so far as ITC is concerned, they have not used such words. They merely mentioned that the ITC has been claimed in excess of entitlement. Now, this could be very wide. For any reason, like if officer is of the opinion that the fellow would not have made a payment within 180 days as per 16.2 proviso, for that reason he has taken, he should be said to have taken the ITC in excess of entitlement. This could be the reason to invoke 67(1). So in my opinion, these are the draconian conditions. However, this is what the law is so far. So if there is any reason to believe that the ITC has been claimed in excess of what has been actually entitled to him for any reason, even for the sake of mismatch with GST at 2A, that officer would have an authority of 67(1) and he would be able to initiate the action. Then another person for which the 67(1) can be used, that I said that it is a transporter or the owner or operator of a warehouse or a godown, for which 67(1) can be used. However, it has been mentioned in the law that a transporter of goods must be transporting the goods which would have escaped the payment of tax, or the owner or operator of a warehouse would have stored the goods which would have escaped the payment of tax, or they would have maintained the accounts in such a manner that can cause evasion of tax. If that is the scenario, in such case 67(1) can be invoked. For example, there is a warehouse keeper who is issuing a warehousing receipts to the person who stores goods in the warehouse. However, the copies of the warehouse receipt, the second copy of the warehouse receipts are not maintained by the warehouse keeper. It can give a rise to the suspicion that this is just to allow all persons to issue warehousing receipts even without depositing the goods. This could be a reason to believe on part of the proper officer to authorize 67. However, the first condition, that the goods which have escaped payment of tax, again it needs to be treated as a draconian condition, because it is very difficult for a transporter or the owner to examine whether the goods have escaped payment of tax or not. For example, manufacturer is transferring goods from his one factory to another factory within the same state. In such a case, there is no supply, there is no liability to pay tax. So that transportation can be done based on the delivery challan. Now, whether the transporter is required to examine as to whether this transaction should have been subjected to tax, whether the transporter has to step into the shoes of an inquiring officer and say whether, sir, is the destination is part of your registration? Is the transportation of goods is not really amounting to a supply? So it is very difficult on part of the transporter to examine in such a fashion which the inquiring officer would otherwise do. However, despite of that, there is a condition that if it is happening in such a scenario, the proper officer has got a power to authorize. Friends, as I said, the reason to believe, that is of utmost importance in 67(1). This is the same provision, this is the same condition which has been used in section 67(2) for the search also. So it is very much important for us to understand that there is a difference between a reason to believe and the belief. Belief is just a mental operation of accepting a fact as true. Many times it has been said कि ये सेक्टर मतलब इसमें चोरी होगी, ये इंडस्ट्री तो उसमें चोरी होगी, अच्छा ये दिल्ली से है तो वहां पर ये गफला होगा. So these are the belief. This is not the reason to believe, because it is a fact which has been embedded in our mind. And when we are talking about 67(1) or 67(2), the proper officer has to ensure a reason to believe and not just a belief. His belief has no relevance. He must have a record in possession. He must have some material evidences based on which he could have satisfied himself that there is a reason why this inspection should or the search should be allowed. This has to be done in same manner as any man of reasonable prudence would have done. In fact, we have a decision that is of Golden Cotton Industries versus UI, that is 2019-29 GSTL from the Honorable Gujarat High Court, where it has been categorically laid down that reason to believe should be of the honest and reasonable person, not just honest and reasonable person, but based on the relevant materials and the circumstances. So any man of a reasonable prudence or any man of utmost honesty, based on the relevancy of the material on hand, would decide that there is a reason that separation has happened, and the proper officer is required to do it in the same way. Mere ipse dixit or a suspicion is not sufficient. And another important aspect with respect to the reason to believe is that it should be of the proper officer with his own mind, with the application of his own mind. It must not be borrowed from the other person. Like somebody from the top would have said, this is happening there, now please authorize. So based on the instruction of the superior officer, the authorization cannot be given. In our income tax, there is a decision that is CID versus Meenakshi Overseas Private Limited 2017 395 ITR 677, in which Delhi High Court has laid down this principle. Another decision, that is Vishnu Shrestha versus UI 27 ELT 369 Calcutta High Court, has also decided and accepted this principle that the application of mind has to be of proper officer. Mere borrowing of an information from the other person is not sufficient. Mere an investigation report transferred by the office of DGCI to the state office is not sufficient. Mere final audit report issued by the audit commissioner to the investigation authority is not sufficient to allow 67(1). So these are the principles which we need to keep in mind. Besides that, there is a necessity for linking between the tangible material which is available to demonstrate the reason to believe. Secondly, on the other side, of course, it is equally important that the reason to believe is a prima facie opinion. It need not be a conclusive opinion. In all cases, I mean, as a taxpayer, we cannot demand that he should have found out everything before initiating this action. If there is a reasonableness of the material available, then it is sufficient, based on which he has formed the prima facie opinion. Another aspect is that reason to believe must have been formed before authorizing. So an authorization has been given to Assistant Commissioner to the Superintendent. He visited the premises. Thereafter, he impounded certain material. Then the material was given to the proper officer. Then based on that material, proper officer has formed a belief that there is a separation of a transaction. That is not valid, and that is illegal. Proper officer has to form the belief before the authorization is given. Another principle which has been laid down relating to the reason to believe is that it is not necessary that it should be mentioned on the authorization letter. And so far as disclosure of reason to believe is concerned, many courts have taken a view that the reasons to believe must be recorded by the proper officer, but the copy of which is not necessary to be given to the assessee or to the taxpayer. However, we have a decision in case of income tax in GKN Drive Shaft India Limited 125 Taxman 963. Honorable Supreme Court has already decided under the income tax law that the reason to believe must be given to the taxpayer at the time of proceeding. That is under Section 147. But no such similar provision is available under the GST law. In my opinion, the reason to believe must be disclosed to the taxpayer as and when necessary, but not at the time of investigation. Once the investigation is over, Thereafter, the reasons can be demanded by the taxpayer and it must be given to the taxpayer. Friends, now we are coming to this cyclone, and that is search under section 67(2). Again, the same principle. There has to be an inquiring officer. There has to be an authorizing officer. A proper officer has to authorize. And the proper officer should not be lower than the rank of a joint commissioner. An inquiring officer can be any officer under the Act. However, the distinction between 67(1) and 2 is that seizure of goods or a document is permitted under 67(2)(1). Under 67(1), there is no power to seize. They have got a power to inspect but not to seize anything. Even if the officer wanted to draw a sample under 67(1), it is not permitted. There is a separate provision in the CGST Act or the SGST Act to allow drawing of a sample, but that authorization has to be given by the commissioner. The officer who is in the rank of a commissioner has to authorize drawing of a sample. However, in case of 67(2), the goods can be seized. As I said, that power is not available under section 67(1). So that is an important distinction between 67(1) and 67. Secondly, and importantly, it has to be allowed when the goods or the documents or things are secreted in any place. It is not just that the authorization is given to seize whatever available there. Authorization has to be given only in circumstances where there is a possibility, where there is a reason to believe that the goods or the documents are secreted. Now, secreted is the word when it has been used in the statute. It has to be understood with the same degree and the gravity. Secreted means a thing which has been kept in, which has not been kept in a normal circumstances, in a usual place. It may be put in a place where the expectation of the person is that the law officer would not be able to find. So if that is the scenario, then it is called secreting the goods or a document. Ordinarily, it is not amounting to secreting the goods or documents. And that again, this principle is also laid down by our Honorable Gujarat High Court in case of Golden Cotton Industries. Another important distinction is between 67(1) and 2 is that this authorization is available for any place. Friends, as I said, 67(1) is available only for the place of business. Here, there is a power to search any place. So it may include the residence of a partner, proprietor, or a director. Again, the same condition that the reason to believe must exist before giving powers. However, it needs to be borne in mind that what has to be secreted is also specified and it has to be same. There has to be a reason to believe that the goods liable for confiscation are secreted. If the goods are not liable for confiscation, and then the goods are, and despite of that the goods are secreted, it is not sufficient. Or the proper officer has an opinion that the documents or the books are useful for a proceeding, any proceeding, and for that reason the authorization under 67(2) is to be permitted. It is very much important for us to understand that when the goods are liable for confiscation. The provisions of confiscation under the GST law is contained in section 130, wherein 5 different conditions are given in which the goods can be confiscated. One of the conditions is that where the goods are supplied in contravention of the provisions of the Act with intent to evade payment of tax. Second condition is when the goods are not accounted for in the books despite it is liable for taxation. Third, the goods are supplied without taking registration despite of the liability to take registration. Fourth, contraventions of any of the provisions with intent to payment of tax. And fifth is using any conveyance or to transport the goods which are liable for confiscation. This is very funny scenario, because if we go through these 5 situations which are given in section 130, I think nothing is left. Because in all cases, the contravention of the provisions of the Act with intention to evade payment of duty can always be believed by the revenue officer. So, in my opinion, the 67(2) has given ample power and the wide power to the proper officer to decide to authorize search in any premises. Friends, another important aspect which relates to the seizure of a material which needs to be borne in mind is the relevance of seized material. We are not talking about the goods which have been seized. We are talking about the books or the documents, diaries, chittis, etc., which have been seized within the course of a search. Friends, in section 132 of Income Tax Act, there is subsection 4A, which lays down a presumption that the books or the documents, etc., which are found from a particular premises are presumed to belong to the person under whose custody or the control of the premises. So, if there is a diary which has been found from the place, from the residence of a director, it was presumed that the diary is belonging to. It is also presumed that the contents of a diary are true. Though the presumption is reputable, but the onus is on the SSE to prove that the contents of the diary are not correct or the diary is not belonging to him. However, no such provision for presumption is there available under the CGST Act. We have a provision, that is section 144 of the CGST Act, which admits this material as an evidence, but that is permissible only in a case of a prosecution. For any proceeding other than a prosecution, the presumption of section 144 does not apply. So if that is a scenario, the question which emerges here is, what is the relevance of a diary which has been seized from the premises of a director's residence? Can that be admitted as an evidence against him? We are not talking about a situation where the confessional statement has been recorded. It is merely a seizure of a diary. Can a revenue officer presume that whatever, first of all, the diary is belonging to the director or to the business of a director, and whatever mentioned in the diary is true and correct? In my opinion, looking to the provisions given, that presumption is not valid. The onus is again on the revenue to prove that the diary is belonging to him, firstly. Secondly, the contents of the diary are correct. And before that, the important aspect is whether the inquiring officer has got a power to seize the diary or not. Let me give another example, that the search has happened at the premises of an accountant who is writing the books of accounts of various parties, and the search is in connection with one of his clients. Can we say that the revenue officer has got a power to seize whatever books of accounts were available at the premises of an accountant, whether or not relating to the person he is primarily searched? In my opinion, the revenue officers does not have power under section 67(2) to seize the material which is not relevant. Firstly, they cannot seize. Secondly, even if it is being seized, those materials cannot be admitted as an evidence against the taxpayer. So these are the important things which we need to keep in mind relating to the relevance of seized materials. Another provision, another power which has been connected with the search and seizure is contained in section 67(4), and that is power to seal or break open the door of any premises or break open the almirah or electronic devices, etc. However, please keep in mind that this provision of the power is available only in a case where the access to the premises has been denied. If it has not been denied, then the revenue officers does not have a power to seal or break open. Friends, another aspects which concerns to the search proceeding is the right of a person. As a consultant, it is our duty to advise our clients what are the rights and what are the duties and the responsibilities of a person being searched, for the place of whose is being searched. And these are the list of the various rights. I will quickly go through it. It is to see the search authorization is duly signed. As a matter of practice, the inquiring officer at the time of entering the premises has to show the search authorization to the person in charge of that particular premises. And that search authorization is nothing but the authorization given by the proper officer, that is the joint commissioner, to the inquiring officer. And that is the document, that is an internal document, the copy of which is not made available to the receiver, to the person in charge, but it has to be shown to the person. And as a token of having seen that search authorization, that person is supposed to sign over the search authorization. Under the GST law, this authorization has to be given in INS 1. Secondly, to verify the identity and make a personal search of the member of the search party, it is obvious that the search party, all the members of the search party have to be identified to the taxpayer, and the taxpayer has got a right to demand for the identity card. You can also insist for the personal search of the members of the search party. Secondly, in case of a residents or ladies are available at the premises, then the search has to be conducted by the lady officer only with utmost decency. Another important aspect relating to the search procedure is the panchas. Friend, as per law, there has to be at least 2 independent and respectable residents to remain present as a witness for the search. The panchas and the credibility of the panchas are very much important in a search proceeding. The procedure, the protocol says that at the time of entry into the premises, the panchos shall be made available. As said, the panchas shall be independent and respectable. Just a driver of the inquiring officer cannot be used as a pancha. We need to examine, we need to see, while we have a panchnama available on record, that who has been made a pancha or a witness to the search proceeding. If the witness, the panchas are related to the revenue officers or to the department, that panchnama and the entire proceeding will vitiate. So the credibility of the panchas is of very much importance. Again, at the time of retraction, or to prove that the statement was taken under duress or coercion, we can also refer to the credibility of the panchas. We can also ask for the cross-examination of panchas, whether the search was properly conducted or not, whether the statement was taken in coercion or not. Their questions can be answered with the help of examination of panchas. Hence, the position of a pancha in the search proceeding is of very much importance. Rights of the person, again, to call for the medical practitioner in case of a need. The children must be allowed to go to school. They must be allowed to take their meals at the normal time. They have got a power, they've got a right to inspect the seals which has been placed on the various things, like the material has been imported. It is as per the procedure, they need to put a seal over the seized material, and that seal has to be examined. It can be inspected. person, so that it can be ensured that nothing can be further added to the seized material or nothing can be withdrawn from the seized material. And that right is available to examine the seal at all times, not just at the time of sealing during the course of search. Even at the time of opening of that seized material, it is necessary to afford an opportunity of inspection to the concerned person in presence of the punchers. Moreover, he has a fundamental right to have a copy of a panchnama. As I said in the beginning, the panchnama is a primary document, and the copy of which must be given to the concerned person. Providing the copy of a panchnama cannot be denied by the revenue officers. If there are rights, of course, there are many duties on the person. First and foremost duty is to allow the unhindered ingress to the premises. He must allow the premises to the revenue officers. He has to put the signature on the search authorization. He has to identify all the people who are available at the time of search within the premises. He must not. He has to ensure that there is no unauthorized person entering to the premises, or he should not encourage unauthorized entry into the premises. He is not supposed to remove anything from the place without the knowledge of the authorized officer. He has to answer. This duty is very much important. He has to answer all the queries truthfully and to the best of his knowledge. As I said, if there is any false information given, then it is punishable under the Indian Penal Code. So it is very much of importance for a person to provide the correct answers to the queries being raised by the officers. However, the point which needs to be kept in mind here is that he is supposed to answer relating to the factual queries. If there is any question of law, he does have a right to deny. He does have a right to call for the consultation. So the very objective behind this search and the other proceeding is to collect and compile the facts. The question of law is not to be decided there. For the determination of a question of a law, there is a separate procedure, and that is known as the adjudication, for which the show cause notice has to be issued. So no question of law should be framed by the revenue officers, and no such question should be attempted to be answered by the person. So whenever we are talking about a duty to answer the queries, it should be relating to the facts, not relating to the question of laws. Here, another connected issue which emerges for the argument is that whether the consultation is available or not. Because many times it happens that the chartered accountant or the lawyer are not permitted to enter into the premises under search. There could be a conflict. People are of the different opinion that sometimes the presence of a lawyer is necessary. Sometimes the presence of a chartered accountant or a lawyer is necessary only at the time of recording of a statement. And so, in my opinion, the presence of a lawyer or a chartered accountant is not permissible unless and until a question of law has emerged, number one. Number two, if there is any statement being recorded and the question in a statement is relating to a proposition of a law, and it is necessary for a person to understand the law first and then state, in such a scenario, the consultation of a chartered accountant, lawyer, or any other expert must be afforded. However, we need to understand the principle that the right to consult and right to defend are two different things. Honorable Supreme Court has also decided the right to consult may be afforded sometimes, but not the right to defend. And again, the presence of a lawyer is also distinct than the right to consult. So sometimes it may be allowed to keep the lawyer present in a premises, but at a distance, as a visible distance, but not at the audible distance. This is just to ensure that statement of the person is not being taken under duress. The search is being conducted as per the protocol. However, the due secrecy of the proceeding is being maintained. Another important duty of the person is to ensure the maintenance of peace throughout the duration of the search and extend full cooperation during and after search. The procedure relating to the search, as I said in the beginning, that there has to be a panchnama which is to be drawn, a statement has to be recorded, because in order to record a statement, the officer has to issue a summons to the person, because mere search and seizure would not include recording a statement. 67(2) does not permit them to record a statement. It is just about the searching the premises and seizing the material. So there has to be a summon which needs to be issued during the course of a search to the person whose statement is required to be recorded. However, it is to be borne in mind that every person who is in a premises is not to be issued a summons. Search under 67(2) is about the search of a premises. It is not the search of a person, and this distinction must be kept in mind. In case there is any information which is needed from a person other than the primary person, in that case a summon has to be issued to him. Many times we have come across a situation where the inquiry is being made with the wife of the partner, wife of the director, or the mother of father of the director. Their mobile phones are being checked. According to me, that is not permissible, because in case they need to examine the facts known to the wife or mother or a father, it is the duty of the officer to issue a summons to them, and thereafter their statement can be recorded. Just a roving or a oral inquiry is not permissible under the 67(2). As I said, it is a search of a premises and not the search of a person, and that principle has been very well laid down by Honorable Gujarat High Court in case of a very recent decision of Paresh Nathala. Again, if there is any seizure, there has to be an inventory. There, the officer is supposed to prepare an inventory of all the materials and the goods being seized, and this order of a seizure has to be given in INS 2. Sometimes it might be possible that the seizure of material, all the materials may not be possible due to the volume involved or due to any other reason. The seizure at the same time is not possible. In such a case, a prohibition order may be issued in INS 03 by the officer, by which a direction is being given to the concerned person in charge of the particular premises not to part with, not to supply, not to share such material or the goods in any manner without the permission of the concerned person. Provisions of Code of Civil Procedure, CRPC, are applicable to search and seizure. Thereafter, a few important other procedures are relating to the release of goods. The goods are seized. The goods can be released on provisional basis by offering a security and a bond. The bond is to be of the same value of the material involved, and the security is to be offered for the amount of tax, interest, and penalty. The bond has to be given in INS 5. In case goods are perishable in nature, then the release order can be given in INS 5 on payment of amount equal to the market price of goods or amount of tax, interest, penalty, whichever is lower. In case of non-payment of the same, officer has got a power to dispose of the goods. Relating to the documents, friends, the documents of the books which have been seized and not relied upon shall be released back to the person within a period of 30 days from the date of notice. Notice, I'm trying to refer to the show cause notice here when we are referring to the notice. If the investigation is over and the show cause notice has been issued to the person, then the material which has not been relied upon in the show cause notice shall be released within 30 days. So at the end of the show cause notice, you will find an annexure which clearly mentions that what are the documents relied upon in the show cause notice. So if there is any diary, any books of accounts, or something else which has not been relied upon, that is to be released to the concerned person. But if the document is relied upon, that will not be released. However, the person has got a right to claim the copies of such documents, because if the documents are seized and if there is a need, then the copies of such documents can always be demanded by the person from the officer. Except in the special cases, the copies must not be denied. So there is a provision that normally the copy should be given. So as a matter of rule, the copy should be given. But as a matter of exception, the copies can be denied if, in the opinion of the proper officer, that giving the copy will prejudicially affect the investigation. However, it has been decided in one of the decision, Honorable Court has decided that copies of the document should not be withheld for a long time. Otherwise, it will not serve any purpose. So normally, as I said, as a matter of rule, the copy should be given to the person. Another provision relating to the release of goods is that if the notice is not issued, if the show cause, ideally the investigation is over when the show cause notice has been issued. Put it differently, the show cause notice, issuance of a show cause notice is an end to the investigation. If for any reason, if the notice is not being issued within a period of 6 months, then goods have to be released. However, the proper officer has got a power to extend the seizure of the goods for another period of 6 months. Thereafter, the goods are liable to be released. Rahul bhai?
Yes, sir.
Should we continue or what is your suggestion, sir?
So you can take 5 to 7 minutes also.
Okay, let
Because
me
we have
quickly go through the penalty provisions and then we may conclude.
Yeah.
Friends, now about the imposition of penalty, that is under section 122. The first penalty is for the specified offences. You will go through the list. There are as many as 21 situations given in this provision. There are 21 different situations given. If anyone can tell me now what is left upon, that would be better. Now the penalty can be imposed upon a taxable person, and it is not necessary that the person should be a registered person. He must be a person who is liable to be registered under section 22 or 24. And the amount of penalty is 10,000 or the amount of tax whichever is higher. So that is equivalent to the amount of tax involved. The penalty can be the amount of tax evaded. It could be a TDS or TCS. It could be ITC availed, passed or distributed, or it could be a refund which has been claimed fraudulently. Now, what are the offenses? Different offenses for which this penalty can be involved. The first is the supply of goods without invoicing or the incorrect invoices. Second is inverse scenario, issuing invoices without supply of goods. Thirdly, collecting any amount as tax but failing to pay for a period more than 3 months from the due date. And fourth is the collecting any tax but failing to pay. So third situation includes any amount which is collected as a tax, though the tax was not payable, but it has been collected as such as a tax. That is in the Finance Act 1994, if you see, that is section 73A. Amount collected as a tax, though the tax was not payable. But if the amount has been collected and not paid for a period of more than 3 months, then also the penalty is invocable. Friends, we know that because of the COVID, there is a substantial delay in the compliances. Most of the relief has been given. Most of the compliances have been, dates for the compliances have been extended by the government. However, date for payment of tax, due date for payment of tax was not extended. So if any person is having a pending liability for the month of March, in my opinion, the 122(1) can apply, because in most of the cases he would have charged the tax. That means he would have collected the tax and not paid to the government, and now it will be almost more than a 3 months time. The penal provision can be applied there. Then again, in case of failure on relating to the TDS or a TCS, like deduction, short deduction, or after deducting not paying the TDS amount to the account of the government, then also penal provisions can be involved. Importantly, the availing of an ITC without actual receipt of the goods or services. that is also a provision where the penalty can be invoked against the person. Then fraudulently obtaining the refund, taking or distributing ITC in contravention of Section 20, failing to keep and maintain the accounts or retain accounts, falsifying or substituting the financial records, suppressing the turnover, transportation of taxable goods without cover of documents, supplying, transporting, storing any goods liable to confiscation, all those 5 conditions which we discussed. Failure to obtain registration despite of a liability, furnishing false information relating to the registration, obstructing or preventing the officer in discharge of his duties, fails to furnish information as and when called for, tampering with or destroying the material evidences, disposing of or tampering with any goods retained. All these activities, acts, or the so-called offenses are punishable and the penalty is imposable. राहुल भाई कुछ रह गया क्या इसमें?
हेलो
कुछ रह गया क्या सर इसमें?
सर अब और तो कुछ रह नहीं सकता है इसके अलावा तो
कुछ रह जाता है तो सर बताइएगा प्लीज.
गूगल को भी ढूंढना पड़ेगा इसमें तो.
गूगल को भी ढूंढना पड़ेगा. Correct. Okay, now another provision which has been recently introduced, and that is Section 122(1)(a). This is talking about the benefit, because there, when the supplier has provided an invoice without supplying the goods, he is liable for the penalty. What about the recipient? Now, this recipient is being covered by Section 122(1)(a). This provision is covering the specified transaction, where the benefit of that specific transaction has been retained by a person. The supplier has supplied the invoice without supplying the goods or services. So tax which would have been charged by the supplier, the credit of which would have been taken by the recipient, that act of receiving a credit without receiving of goods is also liable for penalty under 122(1). But despite of that, because the benefit of the transaction has been retained by this person, he is also liable for penalty under Section 122(1). In my understanding, this provision has been introduced in order to curb the fake invoicing and the related mechanisms, where the operator is retaining a benefit, whereas he is nowhere available on the record. So in such cases, 122(1) was not applicable, but 122(1)(a) will be applicable. However, there is a need for the provision that either of 122(1) or 122(1)(a) shall apply, and not both of them should apply. Otherwise, it would cause a double jeopardy. Another penalty provision is that is 122(2), that is relating to our erstwhile provision of Section 76 and 78, where there is an involvement of short payment or a non-payment of tax because of fraud, willful misstatement, or a suppression. Then there is a penalty of equal amount of tax. If there is a short payment without involving such reasons, then the penalty of 10% is applicable, or 10,000 rupees, whichever is higher is applicable. The concern here is that if there is mere short payment of a tax without involving any fraud, willful misstatement, or suppression, can the departmental officer invoke the penalty provision? That answer needs to be tested before the court of law in coming time. Apart from them, there is a specific penalty for the other charges like abatement or aiding to the offense is specified in 122(1), or acquiring the possession of the concerning the transportation. In short, helping the offenses to be committed or the crimes to be committed by the other person. So for that reason, there is another penalty that is of rupees up to 25,000 rupees. राहुल भाई, अभी कोई और रह गया है तो 125 तो अवेलेबल है.
Yes, अब लास्ट
फिर भी कुछ है जी सर.
हाँ, so last the residual penalty 125 is there.
Last 125 तो है ही है. So normally we used to say that if the GST or 9C is not filed, then this 125 can be applied because there is no late fee for filing of a GST or 9C. But again, this is up to 25,000. So even 1 rupee can be imposed as a penalty for non-filing of a GST and 9C or anything which is not been specifically mentioned in 122 or 123. I will skip this 126, which is of no practical use. Quick review relating to the procedures. The penalty is not automatic; it has to be imposed. Like in the erstwhile regime, the people used to levy late fees. Even in the show cause notice, the late fees were imposed under Rule 7C, read with Section 70. However, the principle is that the late fees cannot be imposed. It is not a penalty which can be imposed. However, the penalty is something which has to be imposed only. It cannot be automatically collected. It cannot be automatically recovered. There has to be a proper proceeding for imposition of a penalty. Late fee is to be paid by the taxpayer according to the procedure. There is no need to recover it. Whereas penalty has to be imposed by way of a show cause notice and by following the proper adjudication process. So the panel, as I said, penalty is not automatic. Section 127 says the reasonable opportunity of being heard has to be given other than 62, 63, 64, 73, 74, because for those provisions there is a specific procedure for the giving opportunity of hearing. However, for any other proceedings, if the penalty is to be imposed, a reasonable opportunity of hearing must be given to the concerned person, without which it would amount to violation of a natural justice and the doctrine of ode alteram partem. Summary notices to be issued in DRC 01. It is a procedure in the GST law that every notice has to be issued to the person along with a summary notice in form DRC 01. DRC 01 is just a summary. Many times we have seen that the officers are issuing only DRC 01. Show cause notice has not been issued, only DRC 01, which is a single page or a two-page statement which has been issued to the concerned person, and that's it. It is the issuance of a show cause notice, which is absolutely incorrect as per the law. The show cause notice, a proper show cause notice has to be issued to the concerned person, because without which, again, it amounts to the violation of ode alteram partem, and because the allegations have not been properly communicated to the concerned person, the defense cannot be accepted, and if the defense cannot be accepted, no demand of penalty or even a tax can be imposed against him. Notice shall be issued before imposing a penalty. Post facto, as CN is not valid as decided by Honorable Supreme Court. First, the penalty is imposed as an order has been issued, and thereafter, show cause notice has been issued with the post facto effect. That is also an invalid notice. This is what I say: the doctrine of ode alteram partem is applicable in all cases, and it requires reasonable opportunity of hearing as well as show cause notice. Both of them are mandatory, otherwise it will amount to violation of this principle and the principle of natural justice. Absence of show cause notice is not open to the department to demand, and the principle of natural justice have to be strictly followed while imposition of a penalty. With this, Rahul bhai, I think I would like to conclude. Now over to you.
So on behalf of the Ahmedabad branch of the WIRC, we extend a hearty gratitude to the CA Rahul Patel for explaining the provisions with regard to Chapter 14 of inspection, search, seizure, and access to the premises, even issuing of the summons, and the last one is the penalty. The way he is elaborated, I think we surely get the distinction between what is said to be the access to the premises, what is said to be the inspection, and what is the search. So thank you so much, Rahul bhai, for giving your precious time for explaining the views on the topic. Thank you so much. And the friends, we will again meet on tomorrow at 4 o'clock. Thank you.